So ladies and gentlemen, we are going to begin this program in 2 minutes from now as our chief guest for the day, Dr. V. Anantha Nageshwaran, Chief Economic Advisor, Ministry of Finance, Government of India, is already here at this venue and is about to arrive in this hall. So keep your mobile phones on silent mode and keep wearing your mask throughout the event. So ladies and gentlemen, we're going to begin this program. Let's put our hands together as we welcome Dr. V. Anantha Nageshwaran, Chief Economic Advisor, Ministry of Finance, Government of India. Good morning, ladies and gentlemen. I'm Purnima Sharma, and on behalf of SHM, I welcome you all to India International Fintech Festival. So without much ado, let's begin today's proceedings. May I request Sri Deepak Sood, Secretary General, SHM, to kindly present a sapling to Dr. V. Anantha Nageshwaran, Chief Economic Advisor, Ministry of Finance, Government of India. We express our gratitude to sir for being part of this program and taking time out for being with us. And may I now request Sri Deepak Sood, Secretary General, SHM, to kindly deliver welcome address.
Very good morning to all. Thank you for joining us. It's rather early, I would say, for Delhi. 10 o'clock, the room is full. Thank you so much. A very warm welcome to our chief guest for this morning, Anand. He and I was sitting having a cup of coffee and was trying to learn about his work, his experience that he's had. Today, we have with us one of the most knowledgeable person in this space. So a round of applause for him. Thank you so much for joining us. Some of you have attended the program of yesterday. I'm sure you had the opportunity to network, to meet other people from the same field, and I'm sure business and other things are going to transact through this whole piece. What I'm going to do is, I'll just talk a very few lines about the economy because Anand is going to talk morely on the fintech side of things. But I think what has really happened is COVID has hit the world, and we all know how we have been through the whole piece. But I think India has come out really, really strong. If you look at all kind of numbers, there are a lot of people who will take a lot of negative shots at a lot of things, but my personal take on a positive thing is that a lot of positivity is in the air for India when I talk India and global, whether it is small scale, medium scale, large scale industry, we all see strong vibes of growth of business across sectors. There were a lot of sectors that were hit, the high touch, but I think they have also kind of bounced back. A lot of jobs in these areas have come back. In fact, you find a lot of people are desired to be hired, and we are not getting the right kind of people right now. So it is extremely important that we kind of work this pipeline through and try to plug in. The opportunity is humongous. The resilience of the Indian industry, I think, and the country has really, really displayed through the whole piece. And I attribute this to the government, and I say this with all humility, that they have actually made reforms which have built a very positive impact. For example, on the financial side, I still feel GST, the best of it is yet to come. I still would urge the government that get the gas, get the oil included into the list of things, and obviously this is a discussion that we continue to have with the government. I think the investment that is being made in the infrastructure of this country, any business, if we want to plug ourselves into the global value chains, infrastructure is important, cost of doing business is extremely important, and all steps are being taken by the government, and industry is a part of this whole piece that is going to help us really, really accelerate and make ourselves part of the global value chain that one is talking about. I think the latest in the feather in the cap is the opening up and the announcement of the 75,000 crore rupees worth of buying of defense equipment from India, and which to my mind is going to be a game changer for us, which normally would be imported, today is going to be manufactured by the large companies, the MSMEs of this country. So that's something which is very, very important. And before I will now get Anand on board, I'll just take one small example, the change and the impact ASSOCHAM has been able to bring about. We work very closely with various ministries, and Anand, I'm taking the example of the Ministry of Roads and Highways. There's a tunnel called Zojila. We all heard about it, right? So this has not been in action for about 15 years. They've been tenders and they've been cancelled. ASSOCHAM worked with Government of India, and we created we work from ground zero. So let me put it this, rather than making changes to the existing, we scrapped everything and worked with the government, created the new documents. And today, Mr. Gadkari talks about us in all forums on the floor of the house. ASSOCHAM partnered the department, and we saved 5,000 crores for this country by redoing this, and you will have this tunnel ready much before the time that is actually targeted. So that's the kind of impact ASSOCHAM and its membership has brought about. I thought this is one success that we have, which I thought we'll share, not from the fintech side, but this obviously results into a huge impact for the business. And all this growth that is talking about the $5 trillion, growing up to the $40 trillion, I think the banking industry, the fintech industry is going to be extremely vibrant, and therefore, the man who can talk to us, the man who can show us the way and his views. So I bring to you Dr. Anand.
It's okay. Do we have the PPT? Fine. Thank you. Good morning, ladies and gentlemen. Thank you, Mr. Deepak Sood, for the kind words of introduction. If I look at the title of the theme of the conference over the last 2 days, including today and tomorrow, extending into tomorrow as well, it's got very potent meaning and significance in all the words that have been chosen for the theme of the conference. And I appreciate ASSOCHAM for choosing this title. It's global, so the vision is not just about India, but whatever is happening in the global space of fintech is part of the theme. Movement, of course, is a very dynamic term because it's constantly evolving, relatively young, but constantly evolving. The word shaping gives rise to the idea that both regulators and industry participants will have to play a role in thinking through as well as acting on the changes that are happening, responding to them, shaping them. So it's a sort of a very dynamic word as well as movement is. The only thing we can quibble about is the word future, because it's actually happening right now in the present as well, shaping the present and the future of fintech. So it's a very, I commend the organization therefore for choosing this title, because it conveys a lot of significance and meaning, and that's a good thing. Mr. Deepak Sood mentioned about the fact that, he would have allowed me to say a few things about the economy, but I've been saying that in so many other forums. And having certainty about the economy in these times is like trying to procure crude oil on the cheap. It's just not possible, because there are so many forces and so many development that are foreseen and unforeseen that can shape outcomes with respect to growth, inflation, external value of the rupee, etc. All that I can say is that the government is aware that the hard-won gains of the last 4 years in terms of macroeconomic and financial stability cannot be frittered away, and therefore it is pursuing a high-wire balancing act with respect to the 4 variables I mentioned: fiscal deficit, economic growth, keeping the cost of living lower for poorer and low-income households, and ensuring that the external value of the rupee doesn't weaken so much that it becomes a source of inflation via imports, etc. It is a balancing act, and many countries are at this are facing a very similar situation. In fact, I would even say the intensity and magnitude of challenges that others face are even higher. So, for example, yesterday the Organization for Economic Cooperation and Development released their forecast for 2023. And if you take a look at the growth forecast for several countries in the world that they have released, and look at the forecast for India as well, we should be relatively happier, if I may use the word, relatively comfortable that considering the challenges that many countries are facing, we are relatively better placed to deal with them, but we are aware of the challenges and responsibilities, and that is about the statement I want to make with respect to the macro picture. Now, talking of fintech itself is very clear, and much of the information that I'm showing here is probably familiar to most of you, but please bear with me. The global investment activity in fintech has been positive. Naturally, there was a dip in the COVID year in 2020, but it picked up thanks to extremely low interest rates and liquidity. It propelled asset markets as well as unlisted investment in fintech, etc. But always, when you have these multiple things operating on an industry, it is difficult to separate the fundamental driver from liquidity driver or a fad. So it's important to make sure that much of the investment is happening for genuine reasons in real businesses that can make a difference both to the consumers and to the service providers. So while we are happy with the kind of investment attention that this sector is attracting, we should also be mindful that it is not a flash in the pan. As far as the fintech growth in India is concerned, this is very important because the speed of transformation in our country, and I think Mr. Deepak Sood alluded to the fact that the best of the goods and services tax is yet to come, and I completely agree with him. But the interesting thing is, notwithstanding the fact that we went through a period of adjustment in the financial sector, in the banking sector, last decade, you could say notwithstanding or because of that, the fintech industry also grew much more rapidly than what was projected. The speed with which the fintech industry has adopted or grown in India within a period of about 6 years compared to 4-decade timeline that was given to us shows that how bad we are in predicting. As they always say, an economist is very good in explaining tomorrow why the forecast he made yesterday for today turned out to be wrong. The same thing is true for all of us, all forecasters. In an era of rapid change, which has been the case in the last 40 years, ever since technology became a driving force of many things in the world, forecasting is a very hazardous business. So it is good, therefore, not to have extremely strong and rigid preconceived opinions, but remain flexible and open-minded to deal with the changes as they come along and respond to them. And the fintech industry growth in India in particular is a classic example of that. Again, this statistic is surely familiar to most of you. The number of UPI transactions increasing by 2,573 times. The number is not a typo. The same thing with respect to in value terms, more than 1,000 times, etc. Now, this is where I think, as Mr. Sood pointed out, we have justifiable reasons to be proud of what the country has achieved. Public digital goods platform has created the space and the underlying conditions for these kinds of developments to happen, which is very distinct from the way technology and digital goods have evolved in the West. And this is indeed a model, not just for developing countries, but also for developed countries. For developing countries, the model is a valid one, simply because of the cost effectiveness of what we have developed. For developed countries, our model is relevant for the fact that this prevents market concentration. This prevents public goods from going into the hands of private sector for private gains rather than public welfare gains, etc. So there is plenty of interesting inferences and lessons that can be drawn from the evolution of public digital goods, on the top of which fintech in India has been built. And that is very useful for both developed and emerging economies around the world. And we can be justifiably proud of what we have put together in the last 5-6 years on this. What are the drivers? In fact, my colleagues, one of whom is here, had put together 3 or 4 slides on this aspect. And it is definitely a very useful topic for study. What drove the fintech growth in the country? There were multiple factors. One is, of course, the cost of data use and the tariff came down dramatically. And the second thing which we saw already is that the funding it attracted paved the way for growth. And if you look at the demographics, a young population that is unafraid to try out changes, and naturally the tendency to innovate, given the unique set of problems we face, we have a natural propensity to innovate. That played a part as well. So, in fact, there was one more slide which I took out, and I think it will be worth studying the drivers of the fintech growth in India very seriously, in greater comprehensive detail, to figure out the relative weight of each of these factors and whether they can be replicated, and how many of these forces would remain relevant going forward, and what we need to replace them with to sustain the growth going forward. Because actually demographics will slowly change over time. Of course, the spirit of innovation would remain, but the funding may not be as prolific as it has been in the last 4 or 5 years if global liquidity conditions tighten, and costs have indeed come as low as possible that they cannot go down any further. And what kind of impact would that have on growth going forward? So it's important to understand the factors that drove fintech growth, to be able to make sure that some of the important ones can be sustained, and how we can adjust to the ones that may not be sustainable. So that is why it's important to study this. And I think India Stack development, again, most of you must be aware of this, has been a very important building block, or the bedrock of India's innovation. From identity layer to payment layer, now we are getting into the data layer, and with new innovations like account aggregators, etc. And it's also good to know that we are getting into health stack as well. I think to a large extent, the kind of impact that these innovations are having on India's growth potential, on making finance and development fruitful for small businesses and for people in poorer and lower income categories, is a subject that is not well studied yet. That needs to be undertaken. Because, as I said, India's cost-effective model is ideally suited for the demographics and the socio-economic profile of this country. And in that sense, what is happening with the India Stack and what is happening with Health Stack are extremely revolutionary from the point of view of India's growth prospects as well. And with respect to, this is a point I touched upon earlier, with respect to the development of underlying technology, it is always accepted without discussion, without even evidence, that private sector drives innovation. But global and change, that is true, but it is a partial statement. If you look at the world in general, even in the United States, internet arose out of a defense-related project. And many of the medicines and vaccines had their origins in government-university collaboration research before they were handed over to the private sector for commercialization. Therefore, to wish away the role of government and government-sponsored institutions and initiatives is actually wishing away a very important pillar of growth for the commercial sector as well. Therefore, one of the lessons of the fintech revolution in India is that government remains an enabler, and it is important for all of us to acknowledge that role and find a way to expand the space of government as an enabler as much as it has to play the role of a regulator as well. And that is what we are talking about next. And it is transforming the financial landscape. By definition, it is disruptive, and therefore the banking industry also is forced to adapt and also follow the maxim. If you can't beat them, you have to join them, and that is what the banking industry is doing, which is a good thing. And in fact, in all of this discussion, we have also we have left out the role that the PM Jan Dhan Yojana played in sort of accelerating the fintech revolution, with now the banking facilities available to 80% of the population. Without that, the market size for fintech wouldn't have expanded also. That is something we have to keep in mind. So clearly, the central bank, which is known mostly as a regulator, is also adapting to the evolving situation, setting up innovation hubs, setting up regulatory sandboxes for trying out things on a pilot basis. So clearly, with respect to fintech, the story is something that is good from the point of view of public and private sectors. Now, this is where I think this is a phenomena that is coming from the West. We do not know whether to attach the label innovation to many of these things. Because the moment we label something as innovation, or transparency, or predictability, these are very interesting words, choice of words. Nobody can stand up in a hall like this and say, I am against innovation, I am against transparency, I am against predictability. You can't say that, because that would sound very antediluvian. You would be considered a Luddite. But it's very important to understand that what we think of as innovation or disruptive, we have to go behind further and ask the question, disruptive for what purposes? Innovation for whose ends? Predictability and transparency in policies for whose benefit? Does that expand public goods? Does that expand public welfare? So decentralized finance, in my opinion, while it is considered an innovation, I would reserve judgment on whether it is truly innovative or truly disruptive in a positive sense, or is it something that we will come to regret. Because, or you might say, Mr. Nageshwaran, your judgment is a bit unfair. Many things develop in this manner, in unregulated fashion, and it is a wild west at the beginning, and that is what leads to eventual, regulation, some kind of rules of the game, etc., paving the way for orderly growth, etc. Maybe, I hope that is true. But much of what is happening in the space of cryptos or decentralized finance, and I completely endorse what Ravi Shankar, RBI Deputy Governor, has been saying, as of now, they do appear to be a case of regulatory arbitrage rather than a case of true financial innovation, in my opinion. So the growth of fintech has accelerated in recent years, as have been the assets in DeFi. And in fact, I would even wonder, when financial markets, when monetary policy becomes restrictive and higher interest rates are available from traditional instruments, I wonder whether these kinds of innovations will continue to thrive or not. So that is also a question mark that I want to leave with you. If it is something that is going to be a source of value or an alternative to fiat currencies, it has to satisfy many purposes. It has to be a store of value. It has to have widespread acceptability, and it has to be also a unit of account. In all these cases, the new quote-unquote innovation, such as crypto or decentralized finance, are yet to pass the test. So I wouldn't be very excited by them, because sometimes we may not be fully aware, or we will not be able to fully comprehend the kind of forces we are unleashing ourselves. So I would be somewhat guarded in my welcome of some of these fintech-based disruptions like DeFi and cryptos, etc. And as you can see here, the more decentralized they become, and the absence of a watchdog or a centralized regulatory authority, it also means that it is a world of Caribbean pirates, or it could be a world of winner take all, in terms of being able to really taking it all from somebody else. So I think, and also the recent development with respect to Luna and Terra USD are definitely very important cautionary tales that we need to keep in mind. This is something that I have already mentioned. Our digital infrastructure is a source of pride, and we need to recognize that as we move forward. So, I have overshot my time by a couple of minutes. In order to sort of conclude, I would say Fintech in general, by and large, as far as India is concerned, has indeed strengthened the financial sector, has made it more accessible and affordable, because risk evaluation is now possible even without collateral, because one of the banes of Indian banking has been the reliance on collateral-based lending, shutting the market out for many people who don't have collateral to offer. And finance and technology in combination should actually help to eliminate that. That is when it would serve a public purpose, and it is happening. The ability to analyze risk through big data without having to rely on collateral-based lending is a truly public welfare-oriented aspect of fintech. But at the same time, we do have risks associated with data privacy, consumer protection, and financial stability. It is important that the financial sector does indeed recognize these threats and become resilient to technological change without restraining or constraining the process of transformation, innovation, and competition. And of course, policymakers should develop standards which are globally acceptable. I would in fact say that sometimes we always say India should take the global best practice. But this is one area where India offers the best practice to the rest of the world. It is not the question of India always having to take the global best practice. I would leave one last word with you. While we wax eloquent about finance and technology is never an answer to the human primordial or primary emotions like greed and fear, which finance actually amplifies, I would say none of these innovations would truly serve their purpose unless we follow certain basic hygiene in our governance, in our conduct of business, such as paying our MSME suppliers on time, paying our workers the right kind of dues that they are entitled to in proportion to their productivity, and in being responsible citizens, because always we look up to the government to give us something, but it behoves us also to ask, what is it that we can do in return? It should be a fair quid pro quo. So therefore, fintech or non-tech fin would serve their purpose, provided we also follow some basic and simple elementary rules of the game. Thank you very much.
Thank you very much. That indeed was very insightful. Yes, you didn't take more time than what was due to you, but I thought you were just there with everything that was required to be said about the whole piece. I think the two things that you touched upon, which really kind of reflect on me, and I just can't stop saying that, is pay the MSME on time, is something which is extremely important. I think Iot Chamber represents a lot of small, medium, and large, but I think the pain for the MSME is still something that we all need to work through. Whether you are a large or a small, I think the small needs to work also to ensure that they supply the right products and they grow the right things. So that's one. I think India will not only be the example of standards for fintech, but I think we will have so many more things that India will offer to the world. And I'm very, very hopeful, and I'm sure all of you in this room think with me that this is going to be a possibility. I think forecasting is dangerous, and that's what I do half the times. And like weather, I mostly am not accurate with whatever I do say, but I am normally happy that I'm in the right direction. I'm in the positive direction. I see things positively, and I think I used the word checkered pattern this morning, and Anand said I would put it more positively. I take that as feedback. Thank you. I think agility, flexibility, being nimble-footed is going to be the mantra for us. I just read an article of somebody from Nokia saying smartphones may be no more there by 2030. So which means the life of everything is now kind of really, really small. So the kind of scaling up that needs to be done is in a very short period of time. So thank you very much. Dr. Anand, this is indeed a pleasure to have you this morning with us. A round of applause for him. And with this, we close this session. Thank you so much.
So we are getting ready for our next session, which is the rise of fintech reshaping the insurance industry. We have some very eminent panelists in this session on the rise of fintech reshaping the insurance industry. So keep your mobile phones on silent mode, and I would also request you to keep wearing masks throughout the event. It's a 45-minute session, and some very eminent panelists in this session. It would be moderated by Shri Amit Roy, Managing Director, Insurance and Allied Businesses, PwC. And we'll have in this session some very eminent panelists. Shri Sarbir Singh, CEO, PolicyBazaar.com, will be on the stage. Shri K.V. Deepu, Senior President, Bajaj Allianz General Insurance. We'll have Shri Shubhrajit Mukhopadhyay, Executive Director, Edelweiss, Tokyo Life Insurance. And Shri Indraneel Chatterjee, Co-founder, Renew-Buy. So over to the session moderator, Shri Amit Roy, Managing Director, Insurance and Allied Businesses, PwC.
Morning. Very, very warm welcome to all of you sitting in the audience. And I think it could not have been a better start for the day than the context setting by Chief Economic Advisor and of course Mr. Deepak Sood. I think we are set for a very interesting day on this Global Festival of Fintech, and I love the tagline. Because I think, as a practitioner who have been on the finance space, in the insurance space for last about 2.5 decades, the pace of change that I see in the industry, the pace of change that I see around the entire ecosystem, the opportunities which are available for us as a country, the opportunities which is available for us as individuals has never been this. And with that background, what fintech is doing for insurance industry would be the topic for next 45 minutes. And I have the honor of having a very eminent panel, so look forward to hearing from them. I would actually start the session with what fintech is doing for the industry on three things. Primarily, fintech brought around the much needed interest in the industry. And when I say that, what I mean to say is not in form of who came to the industry to start business. I'm talking about interest as a whole, interest from the perspective of the customer, interest for the perspective of people who would take the industry to the next level, and much needed investor. And fintech brought that. I think fintech brought another very interesting thing, which is a very new set of customer segment. I think never before globally we have seen so much interest in the subject of insurance than now. And thanks to the beautiful innovation, and we heard about transparency, and I'll just add one more T with that. The industry brought in the transformation in an unbelievable speed. And that actually created a very dynamic, very real-time industry, and which is insurance now. And gone are the days when insurance used to be a boring subject. I think most of the innovations now I see in the finance space is happening with insurance. The last point that I would like to mention before I ask the panel to start the discussion is that thanks to fintech, it's a win-win situation, possibly for the first time. When you normally see disruptions troubling the industry, here is actually 1 plus 1 becoming 11. Industry and fintech working together to broaden the entire horizon. And I think that's the biggest plus that we have seen in recent year. And with that background, let me give the airtime to my eminent panelist, and I'll start the discussion with the biggest question that we have in the industry. And Sarbir, can I request you to share with the audience the most important aspect of the industry is trust. With so much of glitzy words around, fintech around, we also saw cyber security being mentioned there, or the lack of it. How fintech is creating trust in this new customer segment? I would like to have your input on that, Sarbir.
Sure. Good morning, everyone, and thanks. I think the point that you just mentioned, insurance is really a product of trust because people have to pay upfront, and then there is a promise that they will be paid later if something wrong were to happen. So I think trust is the backbone of why insurance is bought and why it's not bought. So if you ask people in India why they don't buy insurance, there is a huge degree of skepticism around whether or not they'll get paid, when the moment of truth comes. So I think if you look at what fintechs have done, and obviously I must admit that I'm a bit wary of using this word fintech because today if you look at it, every financial institution is using technology to a great extent. So I think it's a bit, probably it's an hygiene factor today to say that every company in my opinion is a fintech company today. Having said that, I think if we were to define it more from a, as is commonly understood from an internet or consumer internet kind of perspective, what all of us have brought to the table is essentially an expansion so far in distribution. So there are two parts to any financial service. One is distribution, and then the other is the product or the risk itself. And I think so far the focus has been on distribution. In distribution, people have brought focus to the top of the funnel, which is like how do you compare products? How do you discover products? Why should you buy insurance? So I think there's been a lot of focus on protection products, especially from Policy Bazaar's perspective, focusing on term insurance and health insurance. Then I think there is a focus on improving the buying process, right? Earlier there was one buying process where there was an agent who would, help you, or then there were banks. I think now there is individual-led buying where you can come, you can say, I want to buy this. You can personalize the insurance to what you're looking for. And finally, the moment of truth, which is claims. And I think that's where, again, technology has played a role. Today, for many of us who've been around, from a time when physical surveying, etc., was the norm, to now most, small retail claims are settled by, video or just on, on the basis of declarations. So I think we've come a long way. A lot of trust has been built. And I think the next step is, which has started and I think will become bigger, is on the product and risk side. Because that's where there's a lot of data and where I think things can move.
Sir, very great points indeed. And you mentioned claims, and indeed the claims is the moment of truth. And every insurance company or the industry actually is there only to pay claims, right? And if I talk about claims, and we also heard from Dr. Anant is 80% coverage of adult population in banking. So, Shubhrajit, in terms of the spread that is happening now and the opportunity which is there with this 80%, reach in the banking, where do you see the product play? And how do you see that reshaping of the industry? Is it driving the product, or do you think that reshaping of the product is driving the industry? So, your thought on that?
Thank you, Amit, and good morning, everyone. I think there are some fundamental changes that has happened with adoption of technology. So fintech is not actually binary changes. I think, as Sabri rightly pointed out, it has a journey with a technology adoption at a different level. So in a journey. And in that journey, one of the important things that has happened, the insurance industry was a little not sure where their product propositions lies. So, for example, there are a very strong inside-out companies. I can name a few from the strong brands where they have a very strong product focus, and they ensure that, especially in the consumer durables and other places, the brand, the product itself takes the consumer mindset. Whereas, of late, we have seen a lot of outside-in perspective, where many of the aggregators plays an outside-in approach in terms of understanding the customer and catering to the customer needs. Insurance industry typically would have ideally played an outside-in approach because it's difficult to deliver a financial product without understanding the nuances of the customer needs. With the fintech and adoption of fintechs, what has happened, the insurance industry is adapting this outside-in approach, understanding the nuances of the customer needs, trying to figure out a latent need of the customer, and ensuring that have enough analytics and nudges behind that so that they can provide the right set of advisory and come out with a product. So of late, the last 5 years, if I look at the product development, especially what Sadhbir has mentioned in the protection space and some other space, insurance industry are really trying to understand what the customer is looking for and how they can build advisory and a recommendation platform which helps the customer to buy the products. And that, I think, is a leapfrog changes in the outlook the insurance industry is looking at. And that adapted this outside-in approach coupled with data, analytics, and ability to come up with a finer recommendations and superior advisory will take the industry in the next level of play. Yeah.
Sure. And on the back of that, Deepu, if I go to you, and in terms of product and distribution, you have seen it all, right? And now the huge debate around disclosure of distribution charges, and on the background, the industry wants to grow multifold on that. So how do you think that reshaping of the industry, is it also getting driven by the distribution, or is it like distribution is reshaping the product, industry, technology, all of that? Is it the customer lens which is the driver, or is it still the distributor lens which will drive the industry? Your thoughts on that?
Thank you, Amit. It's a good and a tough question. Good morning, everyone. One thing which we need to understand from an insurance perspective is that it is a distribution-led business. Large part of sales still continues to be driven by distributors. The direct channel is still a very small component of the overall piece. And therefore, it has an important role to play no matter what change happens in the industry. Now, coming to your point, Amit, it's always customer lens. Whatever technology you drive, whatever change you bring in, ultimately the customer has to be the end beneficiary. There is no, I mean, that's a no-brainer. It is an evergreen ethos of the entire industry. Now, coming to the changes, in terms of distribution, now there are two ways of looking at it. One is we look at the current forms of distribution, because you've seen agents, you've seen banks, you've seen brokers, you've seen aggregators, you've seen various forms of distribution. So one is how do they get digitized? How do they bring in new age practices so that they can make the entire buying process easy for customers? The other angle which we forget is that the government itself can be a very big distributor. We've seen a huge rise in government schemes across various products across the length and breadth of the country. And the power of the government is unparalleled. So that itself has a significant role to play from a distribution perspective. The other question that you asked, Amit, because you asked me multiple dimensions in the same question, is around the product. Sometimes does the form of distribution help you in terms of coming out with new products? And the answer is yes. Let's take e-commerce. On the face of it, it looks fairly simple, right? You basically move from buying physically to buying via the web. But how does it change? It changes because then you can immediately move from going door to door to actually selling millions of products in a matter of seconds. And we've seen in this situation where when you see, for example, a mobile phone getting sold, right, and you have an embedded mobile protection cover, you can immediately sell millions of embedded insurance policies in a matter of seconds. And sometimes you can even modify it to come out as a niche product. So for example, if customers come back and say that the mobile screen is the one which tends to crack very often, and therefore can have a specific product for that, you can launch that. So that's how we have seen these various forces shape fintech and distribution in the last few years.
Awesome. And with that, we come to that particular point that how the entire universe is expanding. And earlier it used to be distributor, it used to be the manufacturing company and variety of that. But I think how the InsurTech, fintech space is changing the entire universe is something that Indranil can possibly talk the best about it, right? The expansion of the distribution points and some very, very innovative model. So Indranil, my question to you is that if we are looking about exponentially increasing the insurance density, do you think that large technology stack conventional companies will be a slow mover on that, or do you think that something very greenfield, something very nimble, some new model will emerge? Your thoughts on that, Indranil?
Thanks, Amit, and good morning, everyone. Well, if I think about it, from an insurer's perspective, when you look at it, I don't think it's an either-or situation. There will be existing players. There are large distribution houses. There are large insurance companies already in play who are adopting a lot of technologies themselves to kind of reach out to the customers. There will also be new age players, some of us here who are pursuing a path to say, how can we take the product to the customers? But the moot point remains that unless and until everyone plays a part, we are not going to be able to bridge the gap. And the gap is huge. Today we are talking about 4.4% insurance penetration in the country, which is largely driven by life. So 3.5% is life and 1% is general insurance. And the reverse is true in most of the other Western countries where you have large insurance penetration, which means that people are not experiencing enough products in the first place for them to form a view whether they want to have insurance or they don't want to have insurance. And unless you employ a multitude of technologies and a multitude of products across distribution channel, you're not going to be able to make it. So I second Deepu's point to say that, well, there will be agency, there will be banks, there will be brokers, there will also be embedded insurance, where people will be able to experience speedy service. The point of claim has to be experienced for people to come back to say, hey, I want more of this coverage. Otherwise, the consumer perception has been, who needs insurance? Nobody wakes up in the morning and says, I want insurance. It is not something people feel the need for, and unless they experience more of it, they won't feel more of it. Now, to be able to provide that and be nimble about it, technology has to play the key role, because if it is very physically driven, you can't go beyond the 20-30 cities, top 20-30 cities where you have mass and you have volume. So if you have to go down to the 755th district of the country, you need to have a technology layer which allows a provider to reach the 755th district on a marginal cost basis without incurring fixed costs, even for the smallest ticket size product. Increase the experience and therefore increase adoption. So it's not about the organization, but it's more about the technology layer, and unless and until it's nimble enough, whether it's an old organization or a new organization, I don't think we are going to be able to make it.
Awesome. And couldn't agree more on that, Indranil. And actually that brings to that first session remark that we saw on innovation. I think the industry has seen lots of innovation. And certainly the question to you is around innovation. When you see the drive of innovation, are you seeing actually it is helping in terms of shifting a current base? Or are you seeing that you are actually getting something like India's tech in use with the help of innovation? Innovation being a catalyst, for the industry in reshaping. What are your thoughts on that?
No, absolutely. I think innovation is obviously the key to making these changes happen. And if you see what has happened, I think if we can just take the last 2 years where we had this, massive COVID sort of pandemic and event which no one had really forecast. And if you see all the changes that have gone on through that period, right, it would not have been possible without some of the technological changes that happened, whether it was India Stack or others. And if you just go down that list, you'll see that the ability to identify people through Aadhaar and other mechanisms, the ability to understand where that person lives, their financial health without having to again physically collect documents and stuff. The whole medical process. I mean, in insurance, one of the big challenges always is the physical medical in both health insurance and term insurance. I think now in health insurance, it's almost gone out. I think we don't do any physical medicals, I think, except for very small, few cases. In term also, the sort of things have actually gone back and forth on that basis. So I think the innovation has been very fundamental and very basic. And some of these things, like India Stack, these have allowed these things to happen, because without these, this underlying layer, nobody really can create processes which innovate. I feel that because of COVID, and I think it's probably true across industries, we have made progress that would have taken 5 or 10 years, to make, which is just because we were forced to make that progress, we have made it in 2 years. So I think the fundamental innovation that has happened is has been really strong in the last 2 years, and I think it has set the base for what's going to happen in the next few years as well.
I think that's great, and this is for the audience actually. If you recall what innovation, how it is driving the industry, some of you would recall that 2015 or 2016, right, Deepu? One of the companies brought the concept of settling cashless claims within 2 hours, and it made a big news in the media. I still recall there were billboards all over the main cities of India saying that we settle cashless claims in 2 hours. Today, I think as an industry, if you are not settling your claims within 2 hours, you don't exist, right? And that's innovation, that's where it is driven. But again, if I take the customer lens, and if I see that industry is getting driven by customer experience, everybody is talking about hyper-personification and all of that, right? But Deepu, there is a cost attached to it, and cost to the business. How is it impacting? Do you see that there's enough depth in these new models to sustain for long? And do you see that there could be a mismatch of expectation? Do you see that market conduct is getting followed? So your remarks on that, Deepu.
No, it's a good question. Sustainability depends on focusing on the basics. If you look at the insurance industry, there is a term called combined ratio. Combined ratio basically is your total costs. Biggest is claims, and then your commission, and then all your other expenses. Now you need to ensure that you focus on that. You can't let it get out of whack. And we've seen some fintech players where the combined ratio is just shot through the roof, in which case it becomes difficult for them to sustain. But if you are focused on the right areas, then obviously, there is a long-term path to profitability, which will also help you give more products and better services to customers. Now, coming to your specific query, Amit, in terms of, how do you manage the cost amongst these three? When it comes to digital transformation and innovation, there is a cost upfront that you incur because you need to invest in capital expenditure, short form CapEx. But then you derive benefits by having smaller operational expenditure or OpEx over millions of transactions through the coming years. And then when you do that, you are able to give better service to customers. It becomes a win-win. You're able to give better service to customers as well as ensure that you have your costs under control. And if you look at the whole industry, the way firms look at combined ratio, the way firms look at claims, because that's precisely the reason why customers buy insurance policies. There has been a blended view all along, which is in terms of focusing on the customer as well as getting your costs under control. To the point that my co-panelists made around trust. What many people may not know is that if you look at the industry's combined ratio, it's 120, which means for every 100 rupees that they earn, they're actually spending 120 rupees, out of which the bulk of the expenditure goes towards claims. And the whole focus of the industry is how do we pay claims to the right customer? And that's where your cost of servicing also comes in. So you need to have technology in place to ensure that, for example, how do you weed out the fraudulent customers? Do you look at pattern analytics? Do you look at various other methods by which you can weed out such customers and then pay claim to the rightful customers? So by investing in technology in the right areas, there is certainly a long-term path to profitability.
So, very related question, Shubhrajit, and coming to you is that businesses need to create a margin for all this investment, and businesses need to be sustainable, right? And whatever promises that we are making to everyone, out there in the field, that needs to be honored. At the same time, the distributors need to earn money also. So it's a tricky game of creating a product, right? And while people are talking about hyper-personification and all of that, do you see that enough support in terms of data, AI, ML that will drive the product story up? What would be the differentiator for tomorrow? We are very keen to know from your angle on that.
Yeah, I think that's a long question. Give me a couple of minutes to respond that. There are 2-3 things. One is that you spoke about hyper-personalization. I think, as I say, that as we are moving from an outside-in perspective, hyper-personalization is the way forward. And that's where you need to understand the customer nuances, needs, his context, the relevant solutions, and so on and so forth. The moment the advisory is based on hyper-personalization, your ticket size, your ability to sell will improve. The conversion ratio will improve. Because you are basically, rather than selling a one-size-fits-all approach, you are actually proposing a need or solutions which basically caters to the customer. Your ability to engage with the customer, service, and sell will be much improved. So to that extent, the cost of efficiency of the distribution cost will go up. Second point, on the journey of the personalization, the risk management will also be focusing on the similar line. One of the things I think those who are not from the insurance industry, just to give a flavor, there is an asymmetry of payoff between the premium and the benefit, especially for a term insurance product typically. So for a product, and we are also, by the way of innovations, globally India is one of the competitive term product we offer. In spite of our mortality being lower than, it's not even at the median percentile of the global benchmark, we offer one of the most competitive product, and I think PB is quite keen on doing that innovation, and I think we thank aggregator like PB to pushing that agenda and the insurance industry coming up to that. Now, if there is a payoff, asymmetry of payoff between a 1 to 800 to 1,000, so if you pay 15,000 rupees of premium, you get a 1 crore of cover. That's broadly 800 times. If there is such a huge asymmetry, there will be a risk management that is required to be involved. And you cannot, because otherwise, even if you are off by one case, you are 100% negative margin. So if instead of 1 in 800, instead of 1 in 800, if it is a 2 in 800, you are down by your margin is 100% down. So there is a very fine balance in order to manage this risk. And I think, I'm pretty certain that with the kind of data we are trying to get, with the kind of information we are trying to get, with the kind of models we are trying to put in place, we will be able to do that. For example, in our company, we use 3 different kind of a model just to analyze that how to advocate fraud. And I think there are many audiences, many players out here who would be working on this aspect of the risk management, especially on the AI and ML side. And industry, we need to collaborate to see how we can offer these products without creating too much of a pricing difference, and at the same time creating a margin and having a robust risk management. I think one of the fundamental problem is also the understanding of the median pricing and the risk management. Median pricing is done at a 50th percentile expected cost, while pricing and risk management has to be done at a 99th percentile. So I think some of these nuances, insurance industry should be working with the fintech players, where they'll be able to use some of the data and AI. And as it was pointed out earlier also, it has already started. The process has already begun. I think there are a lot of opportunities to that extent. And I think with all this understanding, there is a significant cost benefit, as well as significant value proposition for the customer, as well as the distributor and the ecosystem alike.
That's a great answer. Including coming to you on the related point, I see that there's more and enough opportunity now with the data, and people are ready to possibly share as long as you are offering something differentiated. I think that's the proposition, right? And that's one aspect. The other aspect is what kind of models, that you see emerging, which will actually take it to that next level, where all these are getting used and a new set of customer getting created. Because with all the show and done so far, the average age of insurance purchaser is still not 25. It's around 37, 38, right? If that's the challenge, if industry has to address that, your thoughts on that?
That's a great question. I think what we need to consider is there are 3 aspects to as I see it. One is the product. Second is the cost of distribution. Third is the method of reaching out to consumers. These are, to my mind, the 3 elements that need to be looked at as you are trying to expand the reach and reach out to newer and newer customer segments who are not the 37 plus year olds. Now, when you look at the products, I think the current set of products, the savings-based life insurance products and high-end health insurance products, they're unlikely to appeal to a 25-year-old guy. A 25, 27-year-old guy is more around buying a mobile phone, and it surprises me, people who work in our offices sometimes use a phone which costs $125,000. And I don't carry a phone like that myself. So, people who are spending such a lot of money on buying an asset that looks good on them, it would be pertinent to give them a protection around that. And this is just one example. People are buying fancy bicycles. People are buying a lot of bikes. Something as stark as bike insurance, which is actually a mandatory product. You would be surprised to know that 75% of the entire two-wheeler population in the country is uninsured. Uninsured, not less insured or not. It's uninsured despite it being a regulatorily mandatory product that one needs to buy. So one needs to fit the product to the set of people that we need to address. The second is the cost of distribution. Now, typically, such small ticket size products, because most of these costs are under some or the other regulatory criteria of commissions that can be paid to distributors, nobody wants to take these products to the market. So, selling a 20, someone may say, oh, okay, there is a 25% commission on a product. But if the cost of the products is 600 rupees, 25% of 600 rupees is what? Some 150 odd rupees? 150 odd rupees, nobody wants to spend 2 times to go to a customer spending the fuel where fuel prices are hitting 100 plus rupees. Nobody wants to do that. So one needs to free up some of these limitations in the trade such that even smaller ticket size products can be taken to these kind of customer segments. The third part of what I was talking about is the method of reaching out to these customers, and this is where a large part of technology pools will start coming in, because you cannot afford to fill up the existing set of proposal forms, do medicals, checks, surveys, this, that. All that will not happen. It has to connect to an ecosystem, and whether it's the India stack, and that's something that all regulated entities should be allowed to connect into. We should be able to pull out data, form a thesis, use risk algorithms to price the risk, throw out a price, collect the premium, and issue the policy. All in the same session without actually leaving the customer for a moment, because you can't afford two outreaches to the customer for those kind of products. So if we are, as an industry, if we are able to solve for the product, the reach, and the method of managing the ecosystem, I think we are in for a long run. I think there's enough headroom for growth. We continue to be underpenetrated, and the way technology is kind of coming into India, and it's really leapfrogging over the rest of the world. You almost feel a sense of pride when you go outside to see that, something where you are doing it day in and day out. I mean, something as common, and sir, you also mentioned about the COVID tests. And you feel surprised that you are all carrying apps about, when your vaccine is, who has tested positive around you. And you go outside and you are still handed paper slips for COVID vaccines. It's out of the, it's beyond being weird. We can't even consider it anymore. So the way technology is leapfrogging over in India, I'm sure we are going to make that breakthrough across the ecosystem layers, across players, and make it happen for the country.
Great answer. And Sarbir, coming to you, because you understand the price sensitivity in the space, because you are comparing all the time feature, price, innovation, and the new set of people who are driving the industry now. Do you see the change, or do you agree to that point that is it about affordability or is it about relatability? What's your thought on that? Is price really something which is stopping the industry going to the last mile, or is it about being relatable to people who are not buying it now?
I think the answer to your question is a bit nuanced. It depends on different products. I think Indranil took the example of a two-wheeler insurance, which costs 1,000 rupees, and there obviously, there's not much left for anyone, so it has to be technology-driven. But if you look at health insurance or term insurance, which are the really, if you ask me, see, if there are two products that every Indian must have, right, is health insurance and term insurance. See, everything else is somewhat, optional. You can decide whether you need it or you don't need it. Now, in those two products, I think the point that was being made, that term insurance is very cheap in India relative to global levels and to our mortality and the experience that we have, I think is absolutely true. And I believe that anybody who can afford to buy term insurance, which is available at 1,000 to 1,500 rupees a month, and is not buying it, is being hugely irresponsible and frankly, not very intelligent. So I think affordability is one part of the challenge, and I think affordability is not about the product pricing as much as the form of the product. So you could make a case that should we have 30-year term insurance, 40-year, or should we have 3-year term insurance, or every year it should renew, or something like that. So I think the affordability question is around, and we've seen this in other industries where large pack sizes were broken into sachets, and that drove the penetration dramatically. So I think there is an opportunity in insurance for that. But I think a bigger opportunity is around actually education, where people need to understand that what is the right type of product they should buy. It's not about price. You would be surprised to know that even though we are, a lot of comparison happens on our platform, the cheapest product is only bought 4-5% of the time. So this is a huge myth that Indian consumers will only buy based on price. Indian consumers are extremely intelligent. They weigh the brand, proposition, experience, and price, and they make a decision, just like I think consumers everywhere in the world. So price is not the main thing. I think it is education. If you ask me if there is one thing that we can do as an industry to improve the penetration and to improve the whole thing, is around education. I think Indranil said that nobody wakes up in the morning thinking that we should buy insurance. And I think that has to change. I think more people, I would somewhat disagree. I think there are few people who do wake up in the morning. I think we need to improve that number, and it can only come through education. And whether it's the government at the lower part of the pyramid, whether it's the industry, the rest of us at the middle and top part of the pyramid, I think that's really the key driver that will change things at this point.
Yeah, it's kind of reminds me that, typically if you see that even if someone's buying a new phone or a new car or something, people go to Insta and put a photograph. But in last 2.5 decades, being with insurance industry, I have never seen someone showing the policy bond, hey, I have bought an insurance and my family is covered.
Exactly. I think that's the fundamental point. You see, when you buy a phone, there is some joy, right? You open the box, something happens, right? You transfer your data, everything happens. But when you buy insurance, you just get a PDF in your email box or in your WhatsApp. So I think that is the joy. If we could, as an industry, change one thing, that there is a moment of joy when you buy insurance, I think it would impact everything.
Yeah, just to add to that, I think, yeah, Indians were and have been price sensitive, but I think that's not the all. There has been a shift in the consumer behavior to the experience as well. And as I was mentioning, if you actually, what happens when you purchase a mobile? You get instant gratification. If your advisor provides to provide that, able to provide that personalized solutions, there will be instant gratification. So to my mind, I am very convinced that the contextual, relevant, and personalized offerings are the way to go. And that's where I think the price, this will take over the price in terms of, so affordability will be, especially the youngsters and millennials, and I think it's all about, I see that is experience, that's what drives them. It's not that the price, they will of course look at the price, but overall that's the contextual and relevant offering is what matters most. And one of the things that, just to like to add, I think this COVID has actually played what Taleb called anti-fragile. Actually, we have gained from this COVID, especially in terms of digital adoptions. So I think it's all of it's onus on us to ensure that we take this path and accelerate this entire piece.
Yeah, I think all of us are saying the same thing, that we need to instill pride somewhere, in the entire purchase process. And in this rara of all of that, simplification, technology, new products, affordability. Deepu, I would like to pick your brain on what could be some of the risk areas, and how do you think industry is getting matured to fulfill all those, defined rules, processes, and the right, like I think Sarvesh said that customer getting that right treatment. How is industry prepared for all that within this mammoth growth?
I think risk management is an all-encompassing topic. So you can talk about consumer risk, you can talk about the firm's risk. There are various angles. From a firm's point of view, especially from a fintech point of view, I think one of the risks is it's like driving a car, right? You can drive a car at breakneck speed, but if you don't have the right brakes, you can go out of control. So even let's take cybersecurity. It was referred to even in the previous keynote discussion. If you don't have that under control, even one incident can bring your firm down. So clearly that's a risk. Because when we talk about availability of data, when we talk about monetizing that, how do you manage your data and how do you ensure that it's secure, absolutely secure? So clearly, that's one risk, reputational risk, and it impacts everybody, the customer, the firm, and everyone. So clearly, one area to watch out for. The other is, if you look at the industry, there are multiple risks we focus on. For example, climate risk is a hot topic nowadays, in terms of what do we do, how do we manage that, what are the various products we bring in, so on and so forth, because even customers need solutions. That's one. Thirdly, from an industry perspective, whether it's fintechs or whether it's established incumbents, while we all focus on technology and while we all focus on solutions, what we also need to understand is that expertise is very important. So, we should not undermine the role of that. That's again, a risk factor, because if you launch something but without the right expertise, then customer experience can go wrong. For example, we spoke about, claim settlement solutions, right? Today it happens through video. So what happens if a new firm, without understanding claims, launches that? They take a photograph and they approve. You could have a lot of fraudulent customers getting through. You need to have expertise to understand which risks to approve, which claims to reject. And that only comes through experience. So I think we should not undermine the role of expertise. Sometimes, we have seen when we talk about technology, we get carried away. We use all the buzzwords in town, AI, ML, blockchain, IoT, but without understanding, that the expertise is important. So I think these are 2-3 areas, which are caution areas for firms to watch out for.
I think very interesting aspect of that, and possibly what the industry is not known for is the amount of job creation that the industry is doing now. Because as the horizon is increasing, as the different distribution patterns are increasing, the industry has got a mammoth opportunity to create new jobs for youngsters. And I was talking to one of the interested group which are looking at, a conglomerate of people who are looking at our country to start their operation. And one of the things that they mentioned in assessment of the space is that they are not looking at people with experience in insurance. They are looking at people who do not have experience in insurance. That's the outside in perspective. Now, with that in mind, Indranil, do you think that we are being able to attract the right talent? And I'll tell you the reality. The reality check is if you go to an MBA college and if you are out there on the campus placement, on 0 day, are you getting the right hits? Are you getting enough amount of talent? Or do you see that people are still queuing up for marketing companies, investment banks, and if we are missing that secret sauce of making that, create that zing, around the industry, so what are your wish list on that?
I think from a talent perspective, India does need to a lot more of these colleges, first of all. There is obviously a shortfall on talent. Now, having said that, are we, as fintechs, getting the right amount of sun shining on our heads as we head into these campuses? I think we are there, maybe not absolutely at the top tier, but one level lower, we are there. But when you look at actually driving the excitement around the category, it cannot be limited to the top tier institutes itself in the first place. I think from a scale perspective, as the industry grows, we need to be able to attract people from smaller towns, be able to reach out to them in the first place, because outside of the top 8, 10, 15 colleges of the country, when you go down to a smaller city, you have people are waiting out there for you, right? Wanting to receive you from the airports, if at all it may be. So, base job for baseline jobs on sales and marketing, etc., there is enough and more pull as you go down, a smaller size city. Where I think we need to do a lot more is, I think over the last few years, India, as we were talking about it, has leapfrogged over a large number of countries across the world in terms of technology adoption. And you do need more hands on the table there. And while there is a lot that is happening, a lot of initiatives that's been drawn up by all the governments across the country, there is still a long way to go. So one level, or rather one layer of talent that we do need to solve for is technology talent, because despite all that's happening around the world, we still need more hands on the table to actually make through the cut.
Awesome. And Sarbir, if I come to you in terms of differentiation that you are bringing on table, because any distribution model that you see today, there's always a follower, and they would like to disrupt the existing models. And I know that you have been the forerunner of aggregation, right? And how do you see the industry evolving with all those followers? Do you think that they'll create new space? Do you think they'll eat up the same pie? Do you think they'll be responsible enough? And do you think enough talents are there to upgrade and responsibility take the industry to the new customer segment? Your thoughts on that?
Yeah, I think that's a very important point that you made. If you look at the history of Policybazaar, I think one of the things that we have done is that we have brought new consumers to the table. So it's one thing, that you have existing consumers and you move them around distribution channels. It's another to create new demand. And this has been done because we have invested close to $200 million on advertising, on marketing our services on television. So if you see that, I think the success of, I would kind of take the question from the other direction, and I would say that the success of insurtechs or new players would only come if we are able to bring new consumers to the table. And as has been pointed out, there is no shortage of new consumers. I think insurance penetration is still very low. The problem with getting new consumers is that it's hard work. So as many people on this panel would know, that it has taken the industry 20 years since it was privatized and we have reached a certain point. It is a lot of hard work, it's a lot of investment that has to go in. But I think the only solution is to get new players to the table, new consumers, and through newer styles, new products, new simpler processes, and education. So I think these are the three building blocks that we need to continue to focus on. And as far as talent is concerned, I think one thing we have no shortage of is people. And I think India has, and I absolutely believe that the talent does not reside either in the top tier colleges of the country nor in the top tier cities of the country. I think a lot of people have grown up in different places and have evolved, and And I think when they're given a chance, see, the main thing in developing talent is to give people a chance. And when you give people a chance, responsibility, and an enabling environment, I think they can do wonders. So short term, there is always some concern or the other, but I think in the medium and long term, there is no shortage. But we have to step up to that challenge. We have to be ready to train people. We have to be ready to give people a chance. And I think we'll be surprised with the kind of outcome.
Oh, great. But Deepu, I would like to pick your brain also on this talent and the skill and manpower issue for the industry.
See, sometimes you get, interesting perspectives when you take an outside-in view. And I speak to my counterparts in other countries, they're always surprised to hear about talent shortage in India. I say, how can you Indians say that? You're such a big country, huge population, Indian education system is so good. There are so many Indian immigrants, in so many countries, right? So how can you have a talent shortage? They're always very surprised. And that makes you think. So I think the key, as some of my co-panelists said, one is to ensure that you give people a chance. I think then people can surprise you pleasantly. The other is we do have, pools available, right? On the one hand, we have talent shortage. On the other hand, we have unemployment, right? So how do you ensure that, you get the right folks into the industry, and then tap it? So I think the opportunity is there. It's for us to capitalize it in the right manner through giving people an opportunity and also, skilling them. People can learn, right? We should not assume that once you finish formal education, that's the end of your learning. Today, the world is not about being a know-it-all. It's about being a learn-it-all, right? You can't be a know-it-all. You have to be a learn-it-all. So how do you constantly keep, investing and, giving people opportunities, helping them learn on the job? And, we've also had examples where, such people have actually turned out to be leaders for the company. So I don't see it as a challenge. I see it as an opportunity which has to be tapped in the right manner.
In coming to you almost on a rapid fire round now, we are actually heading towards our closer of the time. Wish list from the regulations, from the perspective of, do you think that enough government support, enough regulations are there when so much talk about reshaping the industry is happening? So some of the things which you think missing from your lens.
Well, yeah, it is a very important point for us to kind of ponder about. While regulations have shaped the industry, as over the last 5-7 years, I think the industry ecosystem, the face of the industry itself has changed with so much of fintech disruptions that are coming in. Now, for us to be able to make the mark, to my mind, I think the biggest thing that from a regulatory perspective, we would want the regulators to consider is having a kind of a free operating zone for insurers and distributors to operate amongst themselves, because fintechs, the lens with which traditionally any distribution company, whether it's a fintech or an agent, has been looked at has been the same, and that lens needs to change, because unless and until that lens change happens, investments into more technologies to build customer acceptance, build on education, build reach into the lower ranks of the country, that investment will not flow through. And for other distributions which will continue to exist, let's say a normal agent who's associated with an insurance company, who basically relies on the insurance company's ecosystem, he has to operate in a particular way, whereas the new age companies have the ability, have the technology, have the intent to operate in another way. But unless that freedom is allowed to operate in both the models, one or the other pool will stifle. And that, to my mind, is the biggest thing that the authorities could possibly consider. The other part is there are certain other nuances in the trade. Some things, it's not easy for, let's say, fintechs to kind of latch onto the India stack itself. I mean, we are registered as brokers, but we are not allowed to kind of pull information into from the India stack. Now that reduces or impedes our ability to create solutions with insurers, and that's probably one of the other things that we would wish the authorities consider.
Thank you. One last question, Shubhrajit, from you is, in terms of culture, do you see a tussle in between the traditional vis-a-vis all this disruption, insurtech, fintech happening, distribution layers changing? So how is the cultural shift happening within the companies? And I mean, a very candid answer is
Yeah,
expected
yeah, that's
out
a
of
great
that.
question actually. And we are discussing the talent, I think culture also something that we can manage internally within the talents available and the talents that is coming in. I think there are a few things. I think, there are some of the grapples that as organizations are going through. So for examples, data-driven decision making versus anecdotal. Anecdotes are great for a storytelling. If you have to convince the audience and the messaging, anecdotes are great, but let the decision be taken by the data, not that what I have seen there, not there. So these are continuous problem. Okay, probabilistic thinking. I think that is something extremely difficult and like an exponential, now at least now people understand exponential post-COVID. Everybody has seen that exponential graph and some understanding as exponential has come. Especially also the fintech players have done quite a lot, not only fintechs, the startups with all these 10x and 5x. So people used to have an incremental growth story. These are also understanding of the exponentials. But the probabilistic thinking, for example, I was watching a comment which was very popular in the social media, little digression. After the Australian Open, at a particular point of time, Medvedev was actually was up 2 sets. I think in the third set he was up 4-3, and Nadal's was going to have he was 0-40 down on his own service. The expected probability of Nadal winning was given a 6% chance. And Nadal finally won. And everybody was riding on the AI, oh, this probability is all bullshit, no one understands all these things. So what is this all about? 6% chance and he won. 6% chance means there is a possibility that 6 out of 100 times Nadal will win. And that happens to be one of the occasions. Unfortunately, in a binary world, we don't understand probability, so that's a big grapple for us. Another grapple is the horizontal versus vertical. You cannot have a fintech approach with a vertical-driven approach. You have to have the end-to-end customer journey cannot happen. This is my operation department, this is my sales department, and so on and so forth, and you ensure the verticals are being maintained. I think the last part is that what I called the one-size-fits-all, this bell curve versus the merit budget. In this world, you need to treat people differently with a different, again, it's a personalization. I love this because I think everybody is different, every individual is different. You have to treat your people also differently in the today's world. So some of these grapples the traditional organizations are going through, and I think they have come a long way. People are able to appreciate the boardroom discussion, the management discussions are happening, and we see some of this thing coming up.
Thank you. And with that, we come to the end of the session. Thank you very much, panelists. It was a great time talking to all of you, plethora of experience indeed, and thank you very much, audience, all of you.
Thank you all the panelists for this enlightening discussion. We'll have thank you. We'll have our next keynote address by Shri Dharmendra Jam, Vice President, Paytm. So, ladies and gentlemen, please welcome Shri Dharmendra Jam, Vice President, Paytm, as he delivers his keynote address. Please welcome him with a big round of applause.
Thank you so much to the ASSOCHAM team for organizing such a relevant session for all of us. It was a kind of privilege to hear the thoughts of the panelists earlier. I'll just do some incremental add to the points which were made in earlier session and overall all the sessions. So as we are celebrating this FinTech Festival today, we must acknowledge some of the fundamentals that has set up this industry. The policy initiatives, regulatory initiatives, which have enabled us to bring wealth tech, FinTech, InsurTech, and payments, consumer lending, and particularly the digital loans. So First of all, the first enabling framework, which actually started in way back in 2009 when Aadhaar was launched. So Aadhaar, which is an enabler of today's fintech system in terms of digital KYC, first initiative which has helped us in last 12 to 13 years in bringing digital KYC on the basis of which we all are doing our transactions. So digital KYC wouldn't have been possible without Aadhaar. Then Jan Dhan, Pradhan Mantri Jan Dhan Yojana, where 35 crore bank accounts were opened for the people who were unbanked or underbanked, particularly in area where banks or fintechs wouldn't have penetrated, and the mobile penetration. Now, mobile penetration, we have penetrated, we have more than 100 crore mobile penetration. A significant share, maybe more than 70 crore smartphone users, but there are still 30 crore feature phone users which are still existing. We need to have solutions on that. I'll speak on that. But the mobile phone penetration has enabled us to become part of the digital financial revolution that we all are observing right now. And then the policies, government and regulators, they formulated such a forward-looking policies which actually accelerated the growth of adoption. I'll give you some examples. We all have seen the differentiated banking regulation, introducing an innovative concept which was never existed of differentiated banking like payments bank, small finance bank, prepaid instrument licenses. So these are three products or three particular licenses which not only were differentiated banking, but invited tech companies to participate in this ecosystem. I'll add UPI also. UPI system, why UPI is so popular? Because tech companies of Indian and global institutions have participated in, invested in building infrastructure, and they are actually driving the UPI ecosystem. So the forward-looking state regulations in terms of inviting tech companies, thinking regulations differently, and inviting all these players to participate in ecosystem instead of continuing with a conventional banking. So that is something which actually transformed this industry. Third particular acknowledgement that I like to give is the bill payments. Paytm, you may not be aware that Paytm started its journey with bill payments, telecom bill payments. Now, bill payments, so RBI has brought a framework of Bharat Bill Payment System. Innovative framework where one side all billers can integrate to BBPS, all collector can integrate to a framework. So no biller need to onboard banks or fintech. So this is enabling framework in terms of joining framework, which has been brought in by RBI and has expedited the bill payment onboarding very easy. Now, Bharat Bill Payment has more than 20 categories for which you can make payments so easily. This is something that is a learning. We can observe that none of other countries have innovated so much in fintech, particularly in the regulations. So this is something we must acknowledge, applaud on all these policy initiatives. The last point which I'll say, the digital KYC. The level of advancement is there that now regulator has allowed and allowed to do face recognition or biometric recognition based KYC, even selfie-based KYC, all those are allowed, and all fintechs are actually allowing. Otherwise, getting anybody as part of the financial ecosystem, basis the conventional KYC or document-based KYC, was the biggest entry barrier. That has been brought down significantly. That's why we all are observing such a high growth of adoption in digital payments. This is something that now, one last point I'd like to add, which we may not be aware, that telecom sector, which is underlying communication for all the digital payments. We had observed that there used to be SMSs of fake KYC and sending you SMS to defraud you. So telecom sector has advanced, and advanced regulation have been, a blockchain-based regulation has been brought in, where anybody who is required to send a bulk SMS is required to be registered through a blockchain. What is required to be sent as a template is required to be approved. And whomsoever has given consent, those only can receive such SMSs. So bulk SMSs, which was leading to fraud, has been regulated now by telecom. There is a regulation in 2018 which is being implemented. So for fraud prevention, telecom sector has played a significant role that we must acknowledge. Now, these were all enablers or enabling regulations or policy initiative or regulatory initiatives. This is part one. Now part two. Where are we going? Where should we focus? What are the areas now we have traveled this journey? So Paytm has been in this space for more than 10 years. And our primary vision is to bring the remaining 500 million people into the mainstream economy. How can we do that? What are the key thrust areas where we can look at? One thing that we must face, that the new user, first-time user of digital payments, of course, UPI is doing excellent in terms of 550 crore transactions, 10 lakh crore worth of value of transactions per month. So it was not 6 years back, it was not even per year. So this is 10 times of what it was there in 2016 when UPI was launched. So how to continue that particular growth? I'd like to add one more point. UPI we all know, but the prepaid instrument, wallets have also played a significant role. The first time users, wallet has not shown that much growth, but still per month, more than 40 crore or 50 crore transactions are happening on wallet. And wallet has been growing. Last year, it has grown 30% by volume and 50% by value. Of course, this looks lesser in terms of UPI, but wallet is a very much kind of instrumental in terms of first-time user who do not want to expose their bank account. They just want to transact using wallet. Nobody is required to keep wallet in their pockets because they have PPI or wallet instrument, e-wallet instrument. So we must ensure that wallet also travels its journey. Now wallets are becoming interoperable. Earlier it was the only thing which was not interoperable, but now these are also becoming interoperable, which will actually add the growth of this ecosystem along with UPI. UPI is bank to bank, and wallet it's a min KYC or full KYC instrument which is being used. So wallet is going to be a game changer in future. Now, second particular point I like to add, we have been saying about machine learning, we have been saying about AI. There is one instrument we are missing is IoT based devices. If you have seen today's street vendors, they do not want a static QR code or a picture of QR code. They want QR code which speaks. Why they prefer it? Because level of trust. They do not have smartphone, they do not have something which communicates to them in their own language. So now there are innovative devices which communicates to the user in their own languages. 16 languages this device speaks. Or whatever, and they can, if an owner is not at the shop, the support staff can actually accept payments and understand that these notifications are there. Otherwise, he has to wait for the owner to come back. So these all are small innovation, IoT-based devices which are making difference. If we have to, see, we have penetrated at the urban area, semi-urban area. Now the focus is that in tier 3 and below cities, how we can penetrate, and remaining adult population, how we can make them part of the digital economy and make them transact, not only be aware, but transact. So these IoT-based devices which speak in their language, which communicates in their language, which can actually, they can, if they are not much educated or even no educated, they can do transactions. That is something that IoT will play a significant role. We must as part of the schemes, government schemes, or as part of any digital payment infrastructure initiative, it's important that we focus on IoT devices. Traditional POS, traditional QR code may not work there. So that is something which is required to be looked at. And now, in urban area also, there are use cases which are digitized. Most of these, like payment at merchant, everywhere we can see that these are digitized. But there are some use cases in our eyes, in front of our eyes, that we have to pay via cash. Or people are still using cash prominently at those. I'll give you some examples, which is an observed and a factual scenario. If a two-wheeler goes to a fuel pump, in more than, I would say, 70% of the scenario, the mode of payment is cash. For small value payments, it's cash. How we can use the present models, I give you some example like buy now, pay later. Buy now, pay later is a mode that if a person does not have a credit card, he can actually get access to this. He can fill his tank and pay later. This is something, this will converge this whole cash transaction to digital transactions. We have to find out use cases of FASTag. Most of the vehicles are now FASTag enabled. Can FASTag be used for fuel payments, parking? Yes, there are experiments and many airports, parking and many parking lots have already penetrated. But how fast we can leverage those FASTags to enable these use cases to accept digital payments. So these are the innovative, the third use case which I would like to enable, which RBI is also thirsting on, in feature phone-based payment. Now, UPI is being transformed. Earlier, UPI used to be, or right now also, it used to be VPA-based or QR code-based payment. Can UPI be a mobile-based payment? I can pay, I know your mobile number, I can pay you through that mobile. Now, if this concept comes, which is in pilot stage as of now, then any feature phone user can make payment using that mobile number to another mobile number. We need not to be dependent upon the smartphone or QR code or app notifications. This is something which is very essential. Mobile mapper, which is experimented, which is at pilot stage, and we all fintech players are participating into this. This will transform the remaining part of non-smartphone users, which are there in the ecosystem. This is going to be instrumental, and you'll see that the remaining set of people who are not using digital payments, they'll start using those digital payments. Now, dedicatedly, the fourth point and the second last point I'd like to thirst upon is microloans. You may be surprised to know that very few percentage of populations who has access to banking, they actually do not have access to the lending. So for enabling them to lend, to get access to the micro loans, which is need of hour. If any person getting loan for a small merchant, for a street vendor is very difficult. Government of India launched a very good scheme called as Pradhan Mantri Swanidhi scheme, where 10,000 rupee loan is given to a street vendor. They have given more than 30 lakh loans to street vendors. And not only that, the scheme actually mandates that the street vendor also would like to, would have the instrument to accept payment digitally, like QR code or POS. It's a mandate. So you get a loan and also you get a digital payment acceptance. Very innovative scheme which is being implemented. Similarly, as a private sector, as a fintech sector, what we can focus upon is that giving access to the micro loan. There is a population, we say that there are more than 3 crore merchants who are already using QR code or any other mode of payments. Why can't they be given access to lending, micro lending, because they are already doing transactions, cash flow based lending can be enabled. So I'd like to tell you that Paytm has been experimenting this particular micro loans, and we have given more than 1 crore loan in last 1 year. In 1 month, we have met that pace that in 1 month only we are giving more than 20 lakh loans, micro loan, which are ticket size as less than say 5,000 rupees. And people are returning that loan. This is something which is need of our small street vendor. They need such loans, where government is also focusing in, and as a fintech sector, it is required to be focusing on. Now, Pradhan Mantri Swanidhi Yojana, it was valid till 22, now it has been extended to 24. Because government sees that there is a need, and this will enable small street vendor to digitize themselves and to have the micro loans or the access to the credit. This is something which is going to transform in next 2 to 3 years. Now, last point, which is really important, and it's last, but on priority, it is because we are in the pace where we are growing 50% year on year on digital transactions. We don't need to innovate much, but we have to remove the kind of speed breakers, such as risks, such as the frauds which are existing, or frauds or changing nature or pattern of frauds. We have seen that every year new pattern of fraud comes in. I give you an example, like earlier there used to be SMS-based frauds. Like you used to receive so many frauds that do your KYC, otherwise your account will be blocked. You click on that link, malware gets installed which takes control of your phone. Those are earlier patterns. Now there are fake apps which are getting uploaded. Like you go to merchant and you show the fake payment screenshot. And merchant, they are not aware of such fraud pattern. They consider that payment as done and they are defrauded. So the most important part is that whenever a new fraud pattern comes in, it's important that it is required to be communicated to the digital payment users in an effective manner. Second and most important point is that dispute resolution. So in case of emergency payments, right now gone are the days when 3 or 7 days, after 3 or 7 days, your money will be dispersed back to your account. If an emergency payment is stuck up and you're not getting your refund of your transaction amount, which is stuck up due to any technology glitch or any technology failure, which is not accountable to the user, user should get refund in the earliest possible time frame. We should aspire to work towards that technology. That will actually enhance the trust of the users in the ecosystem. So this dispute or online dispute resolution is something that no manual dispute resolution, online dispute resolution is the way forward. That is one thing. And last point in this particular thing, that cyber security, right now there are number of bodies which are focusing on cyber security. We need to have an umbrella body on cyber security which focuses on any kind of mobile digital payment or any kind of financial frauds. For consumers, not for the large lending frauds, but for the consumer frauds, there is need that there should be an umbrella body which keeps on observing all the related frauds, maybe loan-related frauds or payments-related frauds, and actually focus on resolving those frauds in the real-time mode or near real-time mode. This is something I believe that will drive the digital payment adoption in next 5 to 10 years. We already are at very good pace. Thank you so much. Thank you so much for listening to my talk.
Thank you, Sri Dharmendra Jam, Vice President Paytm, for your address.
Thank you.
Thank you. And now we'll have CEO panel, and the session moderator for this panel is Sri Nitin Jain, Partner Financial Services Strategy and Digital PwC. We'll have to probably do the stage first. It's quite eminent panelist in this session. We'll have 6 panelists, and from PwC, from Paytm, from Spice Money, from Cash Free Payments. So, may I request session moderator Shri Nitin Jain, Partner Financial Services Strategy and Digital PwC. From PwC, join us on the stage. We have Shri Bhavesh Gupta, CEO, Lending and Head Offline Payments, Paytm. Shri Sanjeev Kumar, Co-founder and CEO, Spice Money. Shri Akash Sinha, CEO and Co-founder, Cash Free Payments. And Shri Sabyasachi Goswami, Co-chairperson, SOCHM, National Council on Banking. I also request Shri Kushal Agrawal, Co-founder, Zozo Day, to also, hope I pronounced right. Okay. So over to the moderator, Shri Nitin Jain, Partner Financial Services Strategy and Digital, PwC.
Thank you very much for the intro. Let me welcome all the panelists. The next 1 hour, I think about 55 minutes, should have. I would like to keep it more free flow, and if we are left with some more time, probably we'll open it up for the audiences if you have some more questions. So what we have been seeing, and I think I don't want to get into that boring subject of pandemic, how pandemic impacted your business, how the industry has gone through that pandemic, what all has happened. But what we have seen in terms of trends very clearly is that it's really pushed the entire digital agenda in the market. Consumers just the adoption was really high. And it kind of fueled the growth of all the new players in the fintech and digital space. But now since the pandemic is kind of over, how do we see this entire growth coming back or maybe going into the new areas? And where do we see the next line of growth coming in the fintech space? And again, I would like to go back, when you say fintech space, it's a little confusing for most of the folks because there's so many things in fintech and there are new things which are kind of getting added in fintech. So maybe if I can start with Bhavesh, why don't you go first? What's your view on the road to recovery and the new areas of growth?
Thank you. Thank you, Nitin, for the question, and good afternoon, everyone. See, the way we see this piece it is that pandemic has been, and unfortunately still going on. We hope it ends soon. So two big things have happened. One piece that we see is that over the last 2.5 years, the people who never kind of experienced digital payments or any experience by consuming digital products has genuinely moved up. Right? So there was some study which said about 16 to 17% of consumers in the country are digital natives. That number should have ideally doubled by now because that inertia that at least the older generation of people had, the inertia has gone away. Now, when we stand today, we can see both sides of the ecosystem, consumer and merchant, because merchants are a very important part of the ecosystem in driving digital agenda. On the merchant side, clearly we see that the acceptance of the merchant to accept digital payments in particular has increased significantly. And thanks to UPI, thanks to wallets, thanks to the entire infrastructure which is being powered by QR codes, and as the data suggests, there are more than 50 million merchants on QR codes, whereas we hardly have about 6 million shops with EDC devices. That seems to be growing at a very rapid pace. We don't see, even at Paytm, that number of new merchants getting added on, accepting digital payments is reducing. In fact, it's increasing every month. On the consumer side, we see two trends. There was some level of concern, and that concern is a genuine concern even today, of what will happen, is my safety of my money and transaction actually secure when I'm doing digital payments? I think some bit of it has improved in the minds of consumers, so you see a lot more transactions, repetitive behavior. Some of it still needs a lot of work. So in a summary, our belief here is you would find incremental digital penetration both in merchant and consumer, but largely driven at merchant level, because if merchant accept any kind of digital form of payments or they accept digital form of services, consumers will by largely keep adopting this entire thing, and you will see the growth happening in this area.
Thanks. So Bhavesh, you touched upon growth and you've given numbers, and when it clearly sees that we are seeing a lot of growth in this area. But at the same time, you raised a concern that there's a small amount of which in the consumer's mind in terms of overall safety, and should I really go for it or not? And I think the right person, I really wanted to go to Sabyasachi, but I'll skip that and I'll go to Sanjeev first. Sanjeev, since you work on the entire rural areas, probably you'll be the right person. Do you see the same kind of concern? How do you see the rural India adopting to this entire thing? And do you really see growth in those areas?
Thanks, Nitin. So before I answer the question, let me explain to the audience what Spice Money, what are we doing at Spice Money. First, we are a rural fintech platform and we're trying to solve the problem of access. Access to the 800 million rural consumers who live in blocks and villages of this country, and access of basic services. And Nitin, in the last 2 years, in my mind, we've seen actually in more ways than one, COVID has been a catalyst for us. And if I could to pick up 2-3 of them, the reason what happened is the first point, what happened is since COVID restricted mobility, right, it all of a sudden, and we were in the service of offering essential services, and hence the network was open to solving for those basic banking, payments, and services need, is the consumer started to come to a network and use that network for the services. So that's one change that we saw. Second was what I called a shift in the psychological mindset of rural India on now understanding digital adoption. The digital adoption, the digital literacy, this saw a significant change according to me in the last 2 years. It's not only for us as business, but across all in rural India too. Third, we also saw a lot of the youth picking up this as an entrepreneurship opportunity of can I be a digital change in my community? And that is another signal. So I think my answer to your question is that there is a lot of positive changes that's happened in this whole digital adoption in more ways than one, in terms of either accessing services or understanding that technology can help me to solve my needs. This, at least we've seen in the last 2 years, has been a big change in rural.
Thanks. Sabyasachi, moving over to you, because in a way, the kind of services which you are providing, you are sitting somewhere in the middle and the back end, and probably you are giving information to all the financial services organizations, fintech, non-fintechs, all of them. And so obviously, what we see is that you have the correct information in terms of how this entire engine is moving in terms of growth, because you'll see what kind of information is getting consumed and how the growth is coming. So what do you see in terms of overall growth, which has now come in last, I would say about a year, after the pandemic is kind of getting over?
Right. So I'll answer this in 3 pieces. The first one was when actually the first phase when COVID hit all of us. I think at least the financial services industry was, to a large extent, was divided. Some offerings of financial services could be provided digitally at that point in time. But I think in the last 18 months, every FI has traveled a long way. At that point in time, it was, as Bhavish also alluded to, UPI was there, the wallets were there. So your payments was happening digitally because people were stuck at home and you could avail services and pay digitally. And the government schemes was also using the JAM for disbursing the amount to the last mile account holders. But when it came to the demand side, basically on the consumer side or even on the SME side, where they required some funds to sustain, I think most of the FIs were not there to service. Because in true sense, people were kind of creating some digital department in the last couple of years, but I think it was more to please the stakeholders than truly actually making the mark. I think COVID did show the right path and everybody moved really on the fast track. And what happened in the last 18 months is that every FI that you go now and talk to, they are in serious business of digital or digitalization. What has happened is what fintech has enabled and companies like us has enabled in the last 18 months. It was a fantastic, exciting, overwhelming journey because none of us were prepared for that kind of speed and scale. But what all the fintechs did that wonderfully was to kind of collaborate and consolidate the offerings coming together with the FIs and offering them at the speed of execution. Because when FIs, large FIs, was trying to implement some of the solutions that they were ideating, it was taking time, obviously because of the legacy, you call it systems, technology, or people mindset. But I think fintech brought that agility, and which helped really kind of taking the product and offerings of these FIs to the people in need during this COVID, or we are seeing this post-pandemic as well, the impact that these fintechs have created. So I think overall the environment of collaboration increased, consolidation has increased, the newer offerings and newer use cases which together I would say FIs and fintechs came up with is making a difference to each of us sitting here and everybody out there, a billion population in different spaces. Payments have taken the leap. The next to follow is the lending products, both on the consumer and on the SME side. Thereafter, you will see InsurTech. We had a session early today where insurance or the pocket insurance or a sachet insurance or an embedded insurance, everything you will see fintech making a lot of difference. What is crucial here, just one last point, is that we are still talking under the realms of one or two FSRs. I would say all FSRs have to come forward in this journey to make it truly digital India. It cannot be a single-sided approach, be it a fintech, be it a FI. It has to be fintech, FIs, regulators, and the government bodies which has to come together to make it a true digital.
So, Sabisat, you touched upon the overall fintech, which is kind of, there are new services which are being getting added, and this entire broadening of spectrum is happening. Akash, I would like to, give mic to you that, what do you see? You are in payments, and most of the folks, when it comes to fintech, I think it's become very synonymous. Either people talk about lending or people talk about payments. Most of the folks are not aware beyond this. Where do you see this market going? Do you think that the same percentage will keep on going for payments, or you see some more services getting added here?
Great. Thank you, Nitin. Hi, everyone. I'm Akash. I'm founder and CEO of Cashier Payments. See, we have been operating in this online payment space for the last 7 years. Right, and speaking of COVID, I think we have seen our own ups and downs. I think first part of COVID, we had massive dip because a lot of services were not working. But if I look at data of last 10 months, right, we have seen three times growth in total volume that we process. And also number of merchant signers have grown more than 2 times. Right, so after this COVID, we see a lot of massive shift toward this online, creating online presence for the merchants. And also in this field, we have seen a lot of new fintechs coming up. And we are collaborating with those fintechs in terms of how do we help these merchants start accepting digital payments. Right? So the idea is we as a payments company, right? We started as a payments company for merchants. So slowly we're also building a platform on top of which we see other fintechs developing their solutions. Right? So we have a lot of fintechs who are in say space of Kirana tech, who are in space of payroll, or who are in space of this accounting. And a lot of these guys are going to all the tier 3, tier 4 cities and signing up merchants. And we are collaborating them in terms of how do we give banking services to those customers without them bothering about how to do the backend plumbing, right? So we are sort of creating a platform where any fintech can provide payment services to their SMEs. They can also provide banking services. They can also help them create bank accounts. They can also start issuing cards to them, right? So the entire idea is how do we help them make the entire banking services more accessible, more efficient, and more friendly. And that's how we can reduce dependency on the entire, cash or any kind of manual method which these guys use. Right? So COVID is just I think, is the mind opener for all these smaller businesses. See, historically, we have seen merchants who are in the online space tech savvy, they were more open towards digital payments, right? And offline payments were having a decent life, right? They are saying that there is no drastic need for that. But now after COVID, if anyone wants to broaden their consumer base, if anyone wants to grow their business, they've started taking help of new age fintechs, right? And fintechs are not the ones who are doing direct payments and lending, right? Fintechs are the ones who are creating the accessibility layer through which these guys can access fintech, right? So the definition fintech is growing. It's not just about payments tech, lending tech, or wealth tech, right? I think there are a lot of players in the industry who are taking help of this core service provider and going after the larger set of merchants and giving them fintech accessibility. So that's where we are going to see a lot of collaboration, not just with fintech and banks, plus fintech and fintech, right? So there will be certain fintechs who can start emerging as a super fintech, and there will be a lot of new fintechs which will be, building the services with the super fintechs.
Thanks, Akash. Since you kind of touched upon that you started with services and that kind of thing created into product, and that same thing you're now offering to other players as well, so that they can enable a better journey in terms of overall payments. Now, when the fintech, the entire evolution of fintech happened maybe about, we would call it over the last decade, or maybe most precisely in last 5 years, right? They were always seen as competition to the larger traditional players. But then the entire theory changed, and everybody started calling that, why don't we move to a collaboration from competition, right? And but when we talk in the market as a neutral player, we still see that the large traditional banks do not see fintech as collaborators. They still see them as competition, because the whole point, going back to your question, wherein one side you want to provide services to them in terms of collaborative way, at the same time you are also becoming a competition because you are selling the same product. So my question to all of you, and Bhavesh, I would start with you first. Do you see some sort of consolidation happening here, in the sense, will these few of these fintechs, or they will go to become maybe a small finance bank or maybe a full universal bank, or they will kind of get acquired by larger banks to become more larger player? How do you see this trend?
I think it's a very good question. Before I answer this question, let's go back 5-7 years, right, and look at what was happening in 2010, 2012, when there were no fintechs, but you had private banks who were trying to disrupt the market in their own manner, right? So they were basically trying to do things that the public sector banks may not have been able to do, because customers were wanting that level of service. So I think the demand of consumers will drive change. It is not about what fintechs are doing or not doing. It is now a situation wherein consumers are able to consume services digitally for non-financial products, and that becomes a benchmark experience. So if I'm shopping on Amazon, or if I'm watching Netflix, or I'm doing something else, that is my experience. And I'm looking for a similar experience in my financial products. And that is forcing banks, non-banks, even fintechs, to keep changing and keep evolving. So I think that piece is given. Whosoever will be able to do it themselves will like to do it themselves. And I think banks have done a tremendous job over the last 5 to 7 years in realizing that, albeit a bit slowly, that they need to up their game, and they have significantly improved their consumer and product proposition, largely developing it by themselves. Now, the important element here is fintechs have shown that it is possible. So there are two kinds of people that we are seeing, at least from our perspective, within Paytm. There is a set one, which is very clear that investment that requires for that bank or a non-bank to be able to offer products that consumers and merchants want is not possible by them. So they will go ahead and partner. And they are partnering at a very, very large space. So you look at currently small finance banks, currently cooperative banks, current maybe small private banks, even PSU banks, you would see partnering with neobanks, partnering with payment providers, partnering with a lot of folks. And I think that will continue. because they don't have necessarily a lot of opportunity for themselves to really be able to grow. And this partnership could result in some of these people buying some fintechs, or some mergers could happen. And that's a different story to talk about, but cultural alignment, et cetera, will become a question mark. But that journey will happen. Now comes to the larger players who maybe be controlling maybe 50 to 70% of the market. We see two trends. There is a trend wherein there is extreme competition, right? There is definitely no collaboration happening there, right? Because there you are competing for same consumer, similar merchant, and most likely there are not too many opportunities for everybody to be winning that game, so there are fewer opportunities. So there is intense competition. We are seeing this happen in credit, we are seeing this happen in payments, we are seeing this happen in insurance tech, et cetera, et cetera. And this will continue before some semblance will happen. But then there is a very large part of the ecosystem which is on collaboration, wherein the banks which are regulated, who understand risk, who understand compliance, fintechs who are not regulated, who don't understand risk as well as banks do, have no choice but to collaborate. And I think that marriage has started to play out very, very well in B2B payments, in small merchant payments, in credit cards, co-branding. And the regulator is doing a fantastic job by making sure very amenable policies are being created for fintechs and banks to start collaborating. So if you see the recent guideline of NBFCs being allowed to issue cards with a net worth of 100 crores, is a phenomenal move. So if I'm a fintech and I'm doing a fantastic job of issuing cards and giving great experience, at this point, I can apply for a license and get one and start issuing cards of my own. I don't need to partner with the bank. Similarly, if you look at now payment aggregator licenses, because the third-party payment business is now getting licensed, you see so many fintechs applying for the license by the regulator, and that will change this space forever, right? But there will be certain areas where I believe regulator may not be very keen to give the licenses immediately, where the collaboration will happen. So you will see matured fintechs get regulated or take regulatory licenses as they're available and become a lot more bigger and lot more kosher in terms of their approach to our regulatory practices and building a beautiful business. At the same time, large banks will continue to partner with smaller fintechs, maybe buy some of them, and continue to offer the best experience. But in the minimum common denominator in all this conversation is, I don't think either a fintech or a bank has a choice to not offer the customer experience that customer is now used to, not from financial services, but from industries that they're consuming on a day-to-day basis. And hence, if anybody cannot offer that, will find it very difficult to survive over the next 5 years.
Prakash, what's your view, competition or collaboration?
See, I mean, for the right answer for that is look at the market, right? See, India is a very diverse country, right? You have different kinds of customers, right? Not everyone, want to have similar kind of experience. Right? There are a bunch of customers who want more handholding compared to customers who already are more financially aware, right? And it's not easy for one entity to serve the entire, both the ends of spectrum, right? So that is what the entire reason of fueling of fintech plus bank partnership. And not just that, right? I believe if the value chain is getting bigger and bigger, and more parties will be part of this value chain, and everyone will try to be expert in what they are doing, right? Few could be very great in, say, doing compliance handling. Few could be very great in doing, say, risk handling. Few could be very good in providing end consumer experience by using AI or any kind of machine learning, right? So capability-wise, it's pretty hard for any one entity. I'm not saying just banks, like any one entity, it's pretty hard for them to provide all kinds of capabilities. And that is what's going to drive the collaboration in the entire space, right? And we have been seeing it happen. Even larger banks so we work with a lot of larger banks in India, right? Even larger banks want to collaborate with fintech because their intent is to give best experience to their customers, right? And at the same time, there is also some competition among the banks, right? So it's competition among fintechs, also competition among banks. And how do they differentiate among themselves, right? The only way to differentiate is like get a good partner who can serve their customers better. And that's why you see a lot of small finance banks, a lot of, larger banks, mid-sized banks, they're going after fintech and using their distribution capability to reach out to the market, right? Because as I said, a lot of things may require feet on the street approach. A lot of things require, something great in digital marketing, product marketing, right? So capabilities cannot reside in one entity, and that's why you are seeing a lot of distribution. And which is why I also came back to my earlier point of super fintech, right? Even for a larger fintech, it's not easy to go after all sizes of merchant, even in India, right? India is a large country, 1.4 billion population. A lot of fintechs are going to collaborate with more fintechs. See, end of the day, if you see a very small business in a rural area, right? Rural businesses don't just need a payment, they need an integrated solution. An integrated solution can only be built by combining 2 or 3 services, right? So if I am a small software provider, say for a kirana in a rural area, I'll go and tie up with 3, 4 kind of fintech, and maybe I can also go and tie up with 2 or 3 different kind of banks, aggregate all the services and give a single product to a kirana. And that's when kirana can be hooked to financial services, right? You cannot go and sell 10 different financial services to a kirana guy and expect them to be, like be part of the entire ecosystem, right? So you have to give a very bundle. You have to give something like a smartphone, and a smartphone can have 10 different financial services. And that's how it's going to fuel the entire inclusion, financial inclusion, in the larger part of India.
So what I hear from you is that it's part collaboration, part I could call it a competition, because market is really large and everybody will eventually find their own spaces in
I think
that.
people have the territories defined, right? They say, this is my core territory, I want to be a leader there, but after that I'm willing to collaborate, because my intent is to give good experience to the customers on the ground.
Sorry, Nitin, if I can come in. I mean, just to add to dimensions, I think the 2 things. One is fundamentally collaboration is the key at a fundamental level. I think from a futures perspective, and it's also in terms of what business model you're doing. So like he said, right? At least we've seen, and I've been a banker myself, the thought process, what was there earlier to what it is today. Even the bank's ecosystem and the finances has changed a lot, and for the reasons that we just spoke. One. The second point is very important to ponder is, and that's I think it's crept in the entire industry, is whom are you competing with? Earlier the competition was within the industry. Today it's no longer competing within the industry. It's competition outside the industry also. There's somebody else who can disrupt your model. Right? Hence, I think collaboration, in my opinion, has a very different objective. Competition has a lens to it, but also has a very different way to look at in terms of how you see competition. It's not only for the same service.
Just moving a bit, I have my next question to both of you, Sabyasachi and Kushal. There are 2 kinds of fintechs. One, which are enablers. In a sense, they enable business, they provide services so that businesses can grow. And there are other side of fintechs which are more of acquirer. Right? How do I acquire customer and then start selling products to them? We see the entire weightage is towards the acquisition. How do you see this market evolving in terms of more enablers who can give back-end services to these larger financial players?
Hello. So actually, interestingly, I mean, I'm the youngest member in this panel, and I've seen the days when I used to go with my dad to a bank with a passbook, and to actually withdraw money, he has to kind of take a slip, put some entries, and then he used to kind of take out the money from the bank. From that journey of financial services, I've actually seen that fintech journey coming to this level. The first fintech product I can relate to is the debit card and the credit card. When I was a student, I used to use those, digital products in those days. And it has kind of moved to very specific things, very specific needs of people, varied needs of people, I would say, and it has been diversified in that level. So I would say that financial services space was underserved till a long time, and there were a lot of improvements and technology which has come in play. And if I see the complete fintech matrix, in that fintech matrix, interestingly, there is no bank. So in that, and you can see any study which is going on in the market in that fintech space. You have lending tech, you have insure tech, you have payments tech, you have wealth tech. We are one of the new entrants, which is incentives tech, where companies usually spend some 4 to 10% of their money in incentives and still managing a spreadsheet. So we are the ones who kind of help companies to kind of manage it. So I've seen that fintech industry has gone too diverse in that matrix. In fact, these days we might see some of the ads like JAR where it's all about gold. We have a habit to buy a gold, and typically, whenever we go to a shop, a jewelry shop, they either you buy a completely manufactured jewelry or you buy a gold coin. You have to pay a making charges, and digital gold was one of the way to kind of solve that problem where you can actually remove, you can actually bring that efficiency in the making charges, and you can actually bring value to the customer. So I would say that in current avatar, the fintech startups have created their own space, and it has happened with collaboration with the banks. And in future, I feel that banks will become more like a governing partner who will ensure that all the compliances, governance elements, and they will ensure that the money of maybe the consumers, you and me, will not fall in a trap. And the fintech space will kind of solve some specific problems of consumers and the businesses over a period of time. So I think that's how I visualize, this
Thanks, Kushal. So, Vishal, I would like to hear your views on what kind of new services or new enabling fintech you see in this space.
Okay. To delve on the previous question, collaboration or competition, I think there is also a scenario where each other will complement. And more and more fintechs you will see as an enabler, because the one way that you see the wave today is the channel of acquisition. So all the large FIs or mid-size FIs are using the fintechs as an acquisition channel. But that's only so much. What actually the FIs need today is to create a differentiated product or an experience, as Bhavish said, that what a customer actually would want is not just the onboarding experience, but the end-to-end experience in terms of the complete customer lifecycle management. Now, that's not possible just by a channel to provide, because it has multiple steps which a customer goes through and multiple hops in the bank's journey. Now, that means there are fintechs which will evolve. There are already many like us, but which will evolve, which will kind of give either pocket solutions or an integrated solution as an enabler to deliver that experience by and large FI, which can cut across all the multiple hops, because otherwise we are just saying the onboarding journey to be fantastic. It should be a amazing looking UI, UX, and that's about it. What after that? So if I take a lending use case, how your underwriting experience is, then how about your disbursal is, how about collecting the money back is, how about rewarding the customer if you are paying on time. So I think it has to be fully integrated solutions, which this fintech enablers will, have already started offering, but I think more and more will evolve. One new trend that, which I should have mentioned in my first few minutes, is what this pandemic hit has also thrown to this industry is a lot of job loss, which means unemployment, which has also led us to a stage where we are seeing increasing trend of frauds. Now, you need some enabling solutions there to arrest this fraud or at least minimize the fraud. Now, it is not possible just by the channel or the FI on their own to address this entire big question that is out there. So fraud is a big element because it just increases your cost, because one is your channel cost of acquisition, but thereafter you have to just go on provisioning if you are not having the right solutions to arrest this.
Now, if you have to try and address this element of fraud physically, it's just huge. I mean, your cost of acquisition will shoot off the roof. So basically, you need enablers, or let's say enabling solutions, which can actually help erase or minimize the fraud. So I think there are players who are coming out there and offering such fantastic product, even on the fraud dimension. So I think then there is about the digital preparation of underwriting. In banking parlance, we call it credit assessment memo or a CAM, which is DCAM, digital CAM, where maybe you don't need so much of manual intervention, but everything will happen in a split second because of the digitization, right? Similar journey is happening on the insure or wealth tech or reg tech. I think here more and more enablers you will see in next 12 months. I'm not even saying 3 years, because there are many, many fintechs which have come forward and have created pocket solutions. The only thing that we have to look at is they get rewarded and they get paid for the effort that each of these small fintechs are taking. And maybe an integrated solution will be what everybody, every bank's or every large FI's dream would be. That's what I would leave.
Thank you. So in a nutshell, and if I call it a summary, what I hear from all of you is that this coexistence, this collaboration and competition both will exist together, and what will make or break is, in terms of differentiator, is product and the user experience. I think that's how this is going to be.
Yes, there also I see, there are a lot of areas where we don't have a lot of clarity, right? So when you start collaborating with multiple partners, so we don't have clarity on who is the owner of the data and how is the data security being taken care of.
Correct.
And that, I believe, is a small impediment around the entire collaboration. So a lot of collaboration is happening, but people have to spend more time in thinking, how do you really make it possible?
Correct.
And just to stress on my point on collaboration on fintech, right? So today, Cashy Payments work with all the other fintech partners which are there on the stage today, right? On the way of working one more. So in fintech also, there's a lot of collaboration among all the other fintechs, right? It's very hard to find one fintech which is building everything on their own. So same thing also there in the fintech plus banking industry. But once we get clarity on the data security, data ownership, then I think this collaboration will pick up a lot of speed.
Right. Yeah. In fact, in your last comment also, you and Sabyasachi both mentioned it's a long chain, and I think there is a need for all of us to collaborate in that long chain to complete and then coexist together instead of really getting into that competition mode. So maybe let me turn back to a bit of regulation. The regulator has been of late very active and been very accommodative in getting new guidelines, etc. So they came out with a partial guidelines on digital bank, kind of digital branches. And then the recent announcement 2 days back, which just happened, that the credit card on UPI. Akash, how do you see this change, credit card coming on UPI? How will it change the market in terms of the existing large credit card players or impacting the payment players?
See, we had 2 back-to-back announcements. I think maybe a month back we had an announcement where NBFCs can start issuing credit card on their own. And now this is more about credit card on UPI. I think one is more about how do we issue more and more credit product in the market. And second is how do we make acquiring from these credit product easier. Right? Today, if you look at the acquiring infrastructure, right, it's the majority of acquiring is happening through UPI when it comes to offline payments. And that is where I believe this move will help more and more merchants accept credit product from the customer. So today, very much, they are restricted to only accept debit money from their customers, right? And for credit, they have to, buy POS machine or hardware machine. But I think after this move, they can continue to use the same UPI ecosystem and start acquiring, payments from any kind of credit method which customers can have. This is the starting, but I'm sure there will be more and more addition in this kind of form factor. And the entire acquiring can grow and will really have cashless journey in the offline world. In the online world, I believe credit card along with tokenization is already doing good. I think people can tokenize their card on payment gateways. And for the recurring payment, they don't have to keep on punching the card number. And after tokenization, the card store is also very secure, right? Because none of the payment partners, e-commerce partners, are going to store the plain text card, right? Everyone is going to store the tokenized card, so there is no risk of any kind of card leakage or any kind of fraud because of that. So I think regulator has been very active, very supportive, and the entire intent is how do I improve customer experience? At the same time, how do I keep the money of customers secure? And these announcements are all in line of achieving these 2 objectives.
Bhavesh, moving to you, any expectations from regulator? What kind of changes do you want to see which are conducive to the entire fintech ecosystem in India, which we are lacking today?
I don't think. See, there is a journey of how things should get regulated. So, what at least in my experience, being a banker now, obviously working with Paytm for many years, I've seen that the change in the way regulator thinks. They allow innovation to keep happening, which obviously now we term that innovation as fintechs, which is more prevalent word. They continue to observe till the time it is small. They continue to observe the mistakes and the benefits that innovation is making to the market. And the moment they figure out that the impact, the positive impact of this is going to be material to the overall well-being of the financial services sector, they try to regulate it in the right manner. I think that's the journey that one sees. In that context, two important things have started to happen. One is, instead of the regulator regulating things on a significant lag, they started to build more controls and regulation at a much lower lag. Right? So earlier you used to find that things would keep happening and they would come back after 5 or 7 years and say this is not okay. You can see that even in crypto, that while crypto is relatively young in India, there is talk about regulating it in an appropriate manner so that the entire blockchain as a technology can foresee. The same thing, I believe, will keep happening in various areas. So, payment gateway businesses are getting regulated now. You are obligated to get a license. And payment aggregation, payment gateway business was a business which was never disrupted. It just got disrupted in the last 4 or 5 years. And they figured out that it is important from a data protection, data privacy, card tokenization, et cetera, et cetera. So in a nutshell, what I'm trying to communicate here is that I don't think there is more to be needed. What is needed out here is that what has already now reached scale, we need to look at consumer protection. We need to look at data protection. One such example is that today there is an obligation with UPI. Both the receiver and the sender gets a message. So the sender gets a debit message from their bank and the receiver gets a credit message. That message is expensive. Right? The message costs 12 paisa. It's about 1,000 crores of money being spent by financial institutions in sending a message. And the message is again sent through a third party. So cost and data privacy is a huge issue in a situation wherein, in a scenario wherein you have in-apps notification, everybody's using app, you could always send through an app. There is a trail, there is security. You can be more customized, you can be more vernacular, you can be more elaborate, et cetera, et cetera. I think the way I believe things will change, that some of the areas which have been less regulated will get more regulated for the betterment of overall system. And within that scope, things which are impacting data, consumer protection, and some of the fraud-related elements, which comes as a byproduct, or I call it a pollution of the overall digitization, will get more regulated, more control. And I think that will be the expectation, at least from the industry, that I would have from the regulator.
Thanks. Well said on that. Since we are talking about new trends and there's a lot of noise about and the responsibility which we have towards the overall ESG agenda, and especially when it comes to industry, the retail and consumer picked up really fast, much earlier than us. But now financial services are also really picking up on the ESG agenda. How do we see this entire thing evolving, and what's our plan to really make it possible? Sanjeev, can I have your views in this, since you really work on the rural areas and you are somewhere already addressing this entire ESG? See, today we have the BRSR reporting, but that's only meant for the larger players. But slowly and slowly, it will all be regulated and it will all come to the smaller place as well. So what's your views on this, and how can we really be part as an industry towards this ESG mandate?
So Nitin, I think every organization will have its own path and objective. For us, see, the business model that we are in, it might sound exaggeration, but the only thing we're doing is creating impact, right? And its impact is in different forms. we're transforming lives. So, if you look at impacting about 22 million consumers every month on a platform, they get access to services that they weren't getting, let's say, 2 years ago, 4 years ago, right? And this is basic services. You are creating an impact. Today, they would have to walk 25 kilometers to access that service earlier. Today, they don't need to do. You're also creating an environmental impact. One. So, for us at Spice Money, this is in the DNA of the work that we're doing. And that's the way we've at least orchestrated the organization. Multiple things we've continue to do, and the entire products and services that we do today is some way changing rural livelihood, some way bringing convenience, some way impacting somebody. One. Second, this because of technology, right, and this was not there earlier. Today, the youth, right, the entrepreneurship that we've been able to create, and we see that as a big opportunity. Of creating entrepreneurs because today they can see using digital technologies to serve. Again, you're creating a livelihood for people. I can give you examples like, when in this COVID era, when you wanted people to register for vaccination, what we did is, again, how does a rural consumer register? He's not digitally savvy. So the same network took upon the responsibility of registering people. So what happens is in the model that we are in more ways than one, it's just become the part of the entire operating model that we operate in. Right? Hence, I would want to believe that rather than everyone calls purpose with profit, for us profit with purpose, it's actually the other way around. We're trying to solve something, and it's a more purpose-led organization, which is also obviously has to yield profit because we're a business entity. So I think it's about different organizations. For us, it's become the part of our operating model.
Let's move to a very interesting question or a problem which we all been hearing for last almost about 1 year, which is about the entire great resignations, right? And if you ask my personal experience, most of the larger banks are feeling that consulting, when it was more sought after job, we are also feeling that pinch. We are losing people. Now, is it a musical chair? We are just losing people to each other and they are getting adjusted somewhere else? Or do you all think that there are new avenues created, there are new jobs in the market for people? So we are losing people and people are going there. It's a maze, nobody is able to understand. We are just pushing the cost high. We keep hearing that people are going to fintechs and startups. Since you all belong to that space, what's your view? Can I start, Subhasachi, with you? Are you attracting people, or you are in the same boat?
Since we are part of the ecosystem, we are in the same boat. But let me say two things. See, I mentioned this in yesterday's panel discussion, and I think I would repeat because I don't know whether the same audience is here, but I expect the equilibrium to set in soon, number one. Number two, why startups were attracting talent? One, obviously, because of the culture of innovation. But apart from that, they were flushed with funds, the VC funds, and I see those sooner or later kind of drying up. We see the early sentiments of that. So hence I say the equilibrium is supposed to set in, which kind of will have a rubbing effect on the talent pool, and maybe we kind of arrest this situation to the best extent possible. The next is how we have been able to keep our talent intact and attract as well is promote the culture of innovation. But not only that, we always allow them to experiment and kind of not penalize for the failures, rather recognize them for the efforts that they have taken. So I think that's what the new gen, the next gen, the millennial talent pool expects from each of their organization, to be kind of having that empathy and allowing them to experiment and bring their ideas into action. So as far as each organization walks that path, I think you will be able to control so-called attrition. But yes, I mean, the natural phenomena will still, I mean, gone are those days when our fathers used to work for 20 years, 25 years, 30 years. I don't see that the next gen will do that. So you can probably build a metrics and the model which will be 3 to 5 years. That's about it. And if that's the case, how can you deliver maximum in that 3 to 5 years, and how the talent can get rewarded in the next 3 to 5 years? One more great thing that I think a lot of startups have been doing, including us, is you treat talent as partners. In one form, it is not just a talking term. You actually make them a partner in true sense by making them stakeholders in the company. If you are willing to walk that path, I think the talent is with you. Absolutely fresh out of campus may not realize the potential of ESOPs, but I'm assuming that they also learn fast. So anybody who is 4 to 5 years down in the industry would love to have that with a growing company. So I think these 3, 4 measures, if you take appropriately, you can definitely retain and attract good talent.
So let me extend this question a little more, because this problem is there everywhere and you are no more a startup, but you are part of that fintech ecosystem. I assume that you are attracting talent, but are you able to retain that talent?
So we obviously we're a very large workforce. Paytm is more than 10,000 people, largely engineering, product, and business. So we continue to attract massive talent. You know, we've been hiring a lot of people as we are growing. See, retention is, I would not say is bad, but is not as good as it should be. And there are multiple reasons for it. So if you look at technology, so what COVID did is, it just massively increased the demand for technology talent. It's got nothing to do with startups, et cetera, in my opinion. It's just the fact that if you're a bank, you wanted to be adding more people in technology and digital, because there was an obligation that you had to become far more technology and digital savvy. But you did not have a pipeline of talent which could actually get absorbed. So obviously you had massive job inflation in terms of salaries, limited talent, continue to start to move. So that has been one reason. It's seemingly stabilizing now because the demand has subsided and people have figured out that you did not need that many people because now you build what you had to build, right? So there were excess hiring which had happened everywhere. It's start to come down. I think that there's a bigger second issue which we are seeing at least. The general skill requirement of talent is short-lived now. So if you're hiring a product manager, if you're hiring a developer, if you're hiring anybody who's involved in building any digital product for yourself, because technology itself, customer experience, the way you use tools is changing so rapidly that the person's shelf life is not very, very long. So either the individual have to reskill, which we don't see happening that rapidly, or you basically like to figure out and say, okay, let me get in this developer who understands this language, because now this particular language for coding this solution is much better than having a Java coder or a PHP coder, et cetera, et cetera. I think that is a realization every company will go through. The third thing here is that if you look at business talent, there is no war on business talent. In fact, we can clearly see the job that can have been done by 20 people can now be done by 5 people. Because you don't need that many sales folks, because everybody is now moving to DIY, everybody is now moving to do things in a far more efficient manner. So there is a bit of a lopsidedness in this talent war. Product technology talent continues to be in demand, and the rest is not in demand. And I think at the organization level, what we have seen in terms of retention of talent and otherwise, you give them a great environment. Obviously, you give them a part in value creation, not just compensation. And more importantly, you're able to allow people to experiment with products that they and at scale, which they otherwise can't do, right? And if people find that is happening to them, a large part of talent is very happy to continue and do well. But there is always going to be a small part of talent who is looking for acceleration of growth. You can't do much about that. That talent will go into smaller organizations, in our opinion.
So I'll move to my last question and I'll try and combine both of them. We have a lot of budding entrepreneurs in the room. We have a lot of new fintechs who are trying to build new models, new products, new customer base. And I would like to have the answer, what kind of advice you want to really give them. So Akash, moving to you. What we see in the market, it's maybe being a fintech player, probably you all understand what exactly you are doing. But when you look at it from a consumer perspective, the entire maze is quite confusing, right? There are fintechs, there are digital lenders, there are neobanks. There are so many names coming differently in the market. People are really confused who is providing service, who is the conduit to the service, who is the actual consumer, who is the actual deliverer. It's a very difficult thing. And what's happening is that everybody is trying to acquire. And the mantra is that I'll acquire X, I'm making loss on that, but tomorrow I'll sell Y to those X, so I'll become profitable. Now the whole thing, what we see in the market is that everybody is selling and everybody is selling everything. Is there a buyer which exists now? Because since all of us have turned seller, so where do you see this path to profitability from this entire growth initiative?
See, I believe anyone who's willing to start their journey in fintech space, they should start with a very narrow product and narrow service, right? Because see, there are a lot of problems in this market yet to be solved, right? We don't have to just go after low-hanging fruits, a problem which are very visible, right? There are enough problems, but you have to spend some time in the industry and see what are the new problems which are worth solving, which others either don't have time to solve it or they are not able to give focus to it. Right? So any company who becomes large, right, even fintech space for us or anyone, right? I mean, there are a lot of problems we want to do, but also, have our own challenges, right? Something we want to deprioritize. And there we see, opportunity of collaborating with other fintechs, which we are doing right now, right? For a lot of our new services, instead of building everything in-house, we see someone else has a good talent who has built a good product, and we want to collaborate with them so that we can, have our go-to-market faster. And that's a lot of fintechs can have, edge in the market. See, as a fintech, you don't have to just go after the consumer on the day one, right? You can do a lot of things on the B2B side, right? If you look at banks, financial institutions, or all the fintechs, right? And they all want to grow, and they already have good consumer base, right? But they want to sell more and more to them. They want to sell, more quality products to them. So there we see a lot of younger fintechs can go and collaborate with them, build services together, and have a success in what they're doing. And at some point, they can start, like building bigger and bigger. Right? So that's how I see the journey growing. In terms of profitability, I think if anyone is following the fundamentals of the business, right, and it's like law of supply and demand, right? So you have to be diligent of your cost, you have to be diligent of your selling price, and that's how you can start staying profitable. And if you're in the game of, I have to first acquire, like 1 lakh customers, and then I start selling it, then you have to be very mindful of acquiring cost, and then you have a very clear path on what you're going to sell, right? That is something you cannot figure out after acquiring 1 lakh customer. That is something you have to know on the day one itself.
Well, thank you. And I think this, I see in the entire conversation, one key takeaway, what you say is, it's not necessary that you really go and acquire and get behind the consumer, because there are larger players who already have those consumers. How can you solve their intermittent problem of going to them in a right manner with the right product is key to success. And I think that's the key takeaway for all the audiences. I think we are on the time, or?
Yeah, we'll have to wind it up because it's just last 1 minute.
So I'll just give 2 minutes to Sabyasachi. If you can just stick to this problem. Any thoughts on profit versus growth? How do you really balance that?
It's a great question and a tough one. I mean, any business is there because you make some profit. Your bottom line has to be in black and not in red. So I think while you create any business model or you are trying to create innovative products, what has to be kept in mind is from day one, the execution, the speed of execution, the delivery, and at what cost you can deliver. And will it be accepted and affordable by, if you are on the B2B side, so whether you are B2B clients, or if you are on the B2C side, whether your end consumers are willing to pay for the value that your innovation will deliver. So it's that fine balance, and there is no right or wrong answer here. I think there are people in each organization who does this day in, day out. At the end, everyone has to figure out what is the value that consumer is getting out of that product or service, and how much they are willing to pay. And if you are not able to figure the cost and keep it within that limit, maybe you have to drop that idea. Or you have to figure out a better model which will deliver that value at the cost that customer is willing to bear. Else, you are just building a business with, not so popular word, with VC's money, which will go bust someday. So never look at that.
Thank you.
Right. Startups by definition mean growth, right? So obviously every startup will have their journey where they are looking for growth. And even for us, we are not profitable first almost 2.5, 3 years of our journey, right? Then we started becoming profitable. It's not easy to be profitable on the day one, right? I mean, we're not saying that on the day one, in the first sell itself is being profitable. But so you have to define a timeline, say within 18 months, 24 months, and then you start getting profitable. Otherwise, you can never build a business in this kind of competitive environment.
Nitin, on that, I mean, basically all the companies, it is not just startups, I think, they have to be nimble-footed and frugal. You don't have the luxury of life to spend dollars because we don't make money in dollars in India, primarily, if you are servicing Indian consumers. So you need to be conscious of that. And hence, it is best to be nimble-footed and be frugal. That's it.
Thank you very much for all your valuable comments. And thank you for being a nice audience. Thank you very much.
Thank you so much. Thank you. So we'll have our next speaker, Shri Vikas Verma, COO, South Asia, MasterCard. He'll be delivering keynote address. So ladies and gentlemen, please welcome Shri Vikas Verma, COO, South Asia, MasterCard, as he delivers keynote address.
Greetings and a very good afternoon. Thank you, Asocham, for inviting me here to deliver the keynote address. And it's great to have met a lot of you after a fairly large gap physically. You'll all recall that around this time last year, we were all battling and reeling under the fear of the pandemic that had really caused devastation in our personal lives, in our businesses, and in our economies. And thus I think that the theme and the topic for this summit is apt. How global developments are shaping the future of fintech. In India, the world's third largest fintech ecosystem and arguably the most vibrant, the pandemic has brought about a permanent change, as you might call it, in the way we live, work, and operate. And I work in the payments network, so let me take the consumer angle. As consumers, our focus has really been to protect ourselves against the external environment. And as we interact and with regards to our purchase behavior, we've rapidly shifted to a remote, digital, no-touch kind of an interaction for everything, from paying bills to groceries to ordering food home, and a shift that we continue to see even as the pandemic is phasing out. With the changing consumer mindset, online shopping, contactless transactions have become essential for everyone. And very recently, in MasterCard, we took a worldwide study, and I wanted to share a few snippets of information around that study. Indian consumers, at the top of the pyramid, 49% of them said, we will continue to make more and more online purchases, And that basically means there's been a permanent behavior shift. Also around the growing concerns on hygiene and safety, 79% of people worldwide and 91 in Asia Pacific said they preferred using either tap and go or scan and go types of payments, as it let them pay for goods without physical interaction. And in India, a very large proportion, 77% of the respondents, believe that the shift to contactless is now complete and permanent. We are also seeing that the ever-growing sophistication of e-commerce is further accelerating digitization. A host of connected devices are making shopping and paying for goods and services far easier. And globally, we have seen the younger generations, the millennials and Gen Z, actually drive a lot of this shift. India has been at the forefront of this revolution. If you look at the volume of transactions this year vis-a-vis last, we see a 33% lift in the volume of digital transactions from 5,500 crores last year to about 7,500 crores worth of transactions this fiscal. This is as per published data. The good thing also is that the growth in digital payments is now also enabling bringing the marginalized sections of our society into greater inclusiveness. And the government of India has been at the forefront of driving this growth and has introduced many measures, many of which you're aware of, the JAM, Trinity, as well as the India Stack, which have been really forefront. However, while a lot has been done in the last few years in terms of inclusion, leveraging technology and public infrastructure, we think a lot more needs to be done as the economy moves ahead to realize its next big goal of $5 trillion GDP and beyond. So for the next phase of growth, India will need to focus, and especially fintech in this segment, will need to focus on the key segments of the economy, especially the MSME space and the farm ecosystem, to address any barriers that need to be worn down to bring in greater inclusion. And all stakeholders, including government and industry and us, need to work towards this. We've seen the government's efforts, first democratizing identity with Aadhaar, and then banking and payments with new bank accounts and Jan Dhan as then UPI, and now data and access to credit and markets with initiatives like OCEN and ONDC. And we think this will be step changes in the way the adoption of digital technologies will happen and the benefits that will accrue to the key underserved segments in India, which is the 63 million MSMEs, as well as 150 million farmers, which are the two largest segments of employment and contribute about 55% of our GDP. Fintech today can help in reaching these untapped markets and help build resilience, allow access to newer markets, build customer loyalty, and ensure the supply chains are becoming much more competitive. These are very large and commercially viable models, provided we have the right fit go-to-market constructs. Technology adoption by MSMEs can help them operate their businesses more efficiently, accept e-payments, allow them to compete globally. Receiving payments electronically can improve cash flows and reduce friction of being able to deposit cash and checks. And a history of their transactions will help them to get access to credit. Electronic invoicing and automated processes can help free up time and allow MSMEs to do what they do best, manage their business. All this will need focus on some very important catalysts. The first, improving access and affordability. The second, building relevant infrastructure, especially in the hinterlands. And the third, educating and enabling the target segments on how to use technology for their benefit. Given the nuances of these target segments in India, fintechs will need to use the right fit technology and a go-to-market model, such as an assisted phygital model that you might have heard of, and also that which is enabled by a rural relevant and feature phone driven, maybe internet agnostic kind of a technology. According to a recent Google and KPMG report, digital MSMEs can grow profits more than 2 times faster than offline MSMEs, employ more people, and grow their customer base and expand globally more rapidly. Another survey indicated that SMEs who've gone digital can gain about 34% an increase in profit by adopting digital means. At MasterCard, supporting small businesses is now our DNA, and in 2020, we announced a 250 crore rupee pool of money to help reboot the MSME sector and help them restart their businesses. And I'm pleased to share that over the last 2 years, we've done a fair amount of initiatives, and I'd like to talk about a couple of them, which are really aimed at meeting the needs of MSMEs and addressing the challenges that hinder their growth. You may have seen our Team Cashless campaign with some cricket stars, and we worked in collaboration with the Confederation of Indian Traders, CAIT, to spread awareness amongst merchants in the hinterland, Tier 2, 3, and 4, and also enable them to accept payments digitally, working with our financial institution partners. Lowering the cost of digital adoption is also a very large area. And some time back, we had launched a soft POS solution, which is really an app that you download on your mobile phone, and very soon your mobile phone then becomes an acceptance device, which is again a digital first or a global first in this space. Moving on to farm ecosystems, even these need a lot of focus because this is the second big pillar which is currently so far unattended. And some of the key interventions in improving productivity in this segment can be brought about by adopting smart technologies, leveraging big data, and designing technology and infrastructure such as smart cold chains, logistics, and smart irrigation systems. Fintechs can enable farmers with solutions that help disperse subsidies, enable access to credit and insurance, help them get payments for sold produce, and also get loans against warehouse receipts. Expanding marketplaces for the farm ecosystem is another very large idea. How do we go about expanding from hyper-local to national and then international, and making sure that our agrarian produce finds its space in either a pan-national or an international arena? At MasterCard, in the farm ecosystem as well, we are trying to apply the full breadth of our resources, starting with philanthropy at one end, people, technology insights, and data insights, to create commercially viable solutions that actually will drive long-term inclusive growth. To name a few, very recently, in partnership with the Andhra Pradesh government, we launched a solution called Farm Pass, which is actually a digital cashless agricultural ecosystem, like a marketplace, and that's currently being tested. We are also working with farmer producer organizations, and in the south of India, we worked with a large entity called Leaf, where we now service more than 200 FPOs using the solution. Finally, I think it's very important to understand that with a lot of innovation that the earlier panel spoke about, and with connected devices, while the volume and velocity of digital transactions will increase dramatically, so will the threat of cyber fraud. The CERT actually last year reported over 14 lakh incidents, and these were only reported incidents, of cybersecurity related incidents. And we have reports that suggest that India might be amongst the top 3 countries that are targeted by hackers worldwide. To build, therefore, confidence and trust in digital-first users in the MSME and the farm ecosystem, it's critical to build an ecosystem where they can transact and operate safely without any risk of data theft. At the same time, it's important to put resources behind building awareness and confidence around digital payments and sensitizing users so that they transact digitally and they are very vigilant while they do so online. In closing, I believe fintech has the potential to be the very big game changer that's now necessary to take our growth to the next ecosystem, creating enormous opportunities to build an inclusive India and improve access and quality of financial services for those who are currently unserved or underserved. Each of us, as individuals, businesses, government, and even the social sector, needs to put our shoulder to the wheel, help the fintechs assist them to realize the incredible potential that awaits India. Thank you for this opportunity, and I'd like to also thank ASSOCHAM for providing this wonderfully curated summit. I won't hold you up from your lunch. I know you're already delayed. Thank you and have a great day.
Thank you so much, sir, for your address. And now we can go ahead for lunch. So please be back in 1 hour as we have many speakers today post-lunch. Thank you. There will be a presentation by Shri Vikas Avasthi, who is the director of Checkpoint. Then in this session, we'll have the session moderator, Shri Vidur Gupta, partner E&Y. Panelists are Shri Deepankar Sen Gupta, Deputy Director General, Scientist G, NIC, Shri Deepak Talwar, Chair, ASSOCHAM National Council on Cyber Security. Shri Vishal Motwani, Head of Customer Solutions, India and South Asia, SWIFT SC. Shri Vikas Avasthi, Director Checkpoint. Shri Vipin Surelia, Head Risk Services, India and South Asia, Visa. Shri Joy Shekhri, Vice President, CNI, MasterCard. So we'll have 8 people in this session. So it will be 45 to 50 minute session. Over to the moderator, Shri Vidur Gupta, partner E&Y.
Hi, and a very warm good afternoon. Welcome back after the lunch session. While the word warm in the greeting is a figurative speech, some of you might be out of NCR, so they can realize it's virtually realistic. Okay, just waiting for others to settle down. So we've got an interesting set of panelists here. The way we want to run the next 1 hour as part of this interesting ASSOCHAM India International FinTech Festival is to talk about and debate in terms of the entire security, the financial security of the digital payment, of the Digital India element, which we've been talking. And you might have heard of the Secure Digital India doing the trends nowadays, the term. Let me begin with, I'm sure all of you might have been reading out the reports. NPCI recently published for the May 22, the interesting statistics of 6 billion transactions and which is touching almost 10 trillion in terms of rupees, the amount of volume that's touching. Of course, many of us have traditionally grown up from an era where cash was the only mode of transaction when it comes to commercial elements, vis-a-vis to an state where now in next 2 or 3 years, it's expected that perhaps 60 to 65% of our all financial transactions is going to be digital. So that's a huge amount of shift in the entire thought process and ecosystem of this digital payment, or of this payment, let me say that. At the same stage, fortunately or unfortunately, when the entire digital platform grows, the risk of security, be it cyber, be it in terms of fraud, also goes up. EY does something called Annual Information Security Survey, and the latest one, which we released in 2021, had a fairly interesting element, and one of them, I'll just call it out. In spite of huge amount of money, effort, and energy being spent on cyber security, regulations, and the monitoring by government, and the survey that I'm referring does include India as a key component in terms of response. 75% of the CISOs clearly called it out that in spite of all this effort, these are the times which are perhaps the highest in terms of their threat or their perceived threat in terms of handling the cyber attacks, in spite of so much of effort. So that's we like it or not, but that's the scenario we are into. Before we start the session, the way we wanted to run it is we're going to request Mr. Vikas Avasthi from Checkpoint to help us with a quick brief on the theme. Post that, we had thought that we will request all our esteemed panelists to share their views, maybe just try and simulate about certain questions, certain things which we commonly hear. And towards the end, more than happy to take a few questions from the audience as well. Vikas, over to you.
I can work from here itself. Vidur, Dipankar sir, and rest of my fellow panelists, ladies and gentlemen, good afternoon. And privileged to be here for this event of SHM, where I am going to deliver a talk on cybersecurity for Fintech. And also I'm going to talk about financial transactions, how can we secure, and how can we partner as a checkpoint to secure financial transactions. I'll take just 10 seconds, that's what Vidur mentioned, and he's monitoring that because before coming here, we were talking about monitoring and measuring, so he'll keep monitoring. And cybersecurity, when we talk about cybersecurity, especially in the financial domain, it is not just, it has to be prioritized in all domains of society as well as in the economy if we truly want to unlock the potential of digital economy in India. Right? It is not just one man's responsibility anymore. Now it is from one person to the last person, from CEO, from board to everybody in the organization is responsible for cyber security. And let me share my thoughts. What are the drivers for cyber security, especially in the fintech industry? What is driving cyber security? See, first and foremost is, there are many compliances, regulatory frameworks, such as GDPR, PCS, RBI regulations, IT Acts, multiple things are happening. So many regulations, so many compliances we have to follow. While the new age fintech companies may not be as tightly bounded by all these laws and regulations as the legacy ones, legacy banking system is. Having said so, this is one of the primary driver. And when I say this is primary driver to adopt cyber security in fintech, because we generally are a compliance driven nation, right? We don't get a PUC certificate unless we know that yes, there is a 10,000 rupees fine on it. So there is a penal action if you don't follow certain cyber security framework by RBI. And that's, by the way, applicable for all fintech organizations. It's not just for the legacy banking organization, it is for all fintech organizations. Second important factor is the increased number of stealthier attacks. When I say attacks, these cyber attacks are, the number of cyber attacks are going less in banking industry. We are seeing In last 30 days, we have seen in the last week in India, in banking segment, we have seen around 1400 attacks. Whereas that number is going down, but those attacks are becoming more sinister, more deadlier, and causing more financial loss, financial damage to all organizations. This has become, and this is becoming now because there would be lesser attacks, but more stealthier attacks. That's the second driver which is driving our overall behavior towards cyber security. Third is a fintech data protection. You have to protect your data. And this you can say it's a subset of first compliance and regulatory framework. Whereas there are data protection rules because you generally deal with multiple data collection from your customers, such as their Aadhaar card, Aadhaar number. You have to protect it. Where GDPR or RBI regulation may not talk about protecting Aadhaar card, but as a fintech organization, there is a responsibility that you need to protect your customers' data. Fourth is organizational reputation. That comes at stake. Nobody wants to do a business if somebody's reputation is tainted. Nobody wants to do a business with those organizations. While that may be an ideal statement, but that's what happens when we choose a bank to do a business with, or any financial institution to do a business with. So these are few of my thoughts when it comes to cybersecurity drivers. But what are my recommendations as a cybersecurity practitioner? And I have been into this from almost 2 decades. I can give certain recommendations which might help to these fintechs, that how we can at least contain the certain cyber attacks, right? See, sorry. Adoption of zero trust. That is something everyone is talking about nowadays, and this is important for all organizations to go for a zero trust. There is a subset that you need to go for a multi-factor authentication, which is all of a sudden, I'm seeing that many organizations have started adopting multi-factor authentication or a two-factor authentication, which is becoming a new norm. And there is an important aspect within zero trust framework that's called micro-segmentation. And that's applicable for any network which is being used by these organizations, whether it's a cloud or it's an on-prem network. Second is a micro-segmentation of your applications. So what does it do? It provides and contains a breach area, that if there is a proper segmentation, perhaps one segment may come under attack, but you can safeguard others. So that's the one area. Second, automation. Why most neglected part, perhaps we are still maturing in that curve, but security automation provides you lesser manual errors. Most of larger attacks in last 6 months which has happened in banking segment were mostly a misconfiguration of firewall. Right, 67 to 70% of those attacks were due to misconfiguration of firewall, and that is a manual error. So when we talk about security automation, perhaps that error will definitely go away. So automation is the second part which I generally emphasize much. Then is XDR adoption. While EDR, XDR, MDR, you would have been hearing these terms from so many security vendors. Ultimately, it is something which works in your organization well, and that's extended detection and response. Because this accelerated shift of remote working and working from home has actually resulted into so many endpoints getting compromised. If you see, these endpoints have been compromised a lot in last 2 years during pandemic. So XDR adoption is, of course, a key for all our fintech organizations. Mobile security is something, a lot of mobile, we call it a SMS phishing. You will get some SMS with a URL link, and we don't expect that everybody is a cyber security expert. So generally what we do, we will click on it. This will take you to somewhere, some malicious sites will create command and control, and ultimately they will get access to server and other important infrastructure of your organization. So mobile security, one, it is becoming a more and more
critical threat vector. Second, we are still neglecting that mobile security may not be that bigger threat vector. So that's also an important recommendation from our side. And one more, it is at least there has to be a response. What is standard operating procedure if you are under attack or if there is a successful breach in your organization? Generally, what happens? We do not have some playbooks or SOPs when there is some breach or attack. I can tell you, last week, this one of famous airline came under ransomware attack. Their operations were into mess. I myself, waited at airport for almost five and a half hours. So, and they actually didn't have any kind of operating procedure how they are going to manage it. So there has to be a plan that in the case of any such eventuality, how are we going to deal with it? Right? And last is layered approach to combat phishing. See, email is a number one threat vector, and that remains and that will remain a number one threat vector for all organizations. You would be getting everyday phishing email, and there's a successful threat vector, and this is alluring many customers from worldwide, starting from early 2000 till next few years. This will remain number one threat vector. This phishing and phishing attacks we are seeing in financial sector almost 84%, more than 84% are attacks, successful attacks have happened via email, via phishing links. That's a checkpoint research, that's a publicly available, you can go and download that for your particular industry. So there's a layered approach which is required to combat this phishing, and that can happen by deploying certain advanced phishing protection solutions and at a network level, at the endpoint level, so that you can secure your infrastructure. Vulnerability management system, as I was hearing somewhere last week, it was about that we have a world's second biggest malware repository in India. Second biggest malware repository we do have in India. And that's open for public because that's being maintained by National Cyber Security Coordination Center. So what I am implying to say here, we need to take help from them. We need to know that what are the vulnerabilities exist. And most of the existing vulnerabilities are being exploited again and again when that is reoccurring in our system. So we need to mature and refine on time to time our overall vulnerability management system with respect to IT security. So these are few recommendations which I thought to share with you, all of you. And moving forward, so as a company, you must be aware of the checkpoint because we serve most of the banking segment. We play in each and every aspect of these recommendations, from network to IoT to endpoint, XDR to your mobile security. You will find us everywhere, almost everywhere. So that's few recommendations, and that's all from my side. Thank you so much, ladies and gentlemen. I'd be around for any question, anything if you want to know. I'd be around for some more time. Thank you so much.
Thanks, Vikas, for that self-monitored 10-minute, speech. I think one of the elements that definitely I picked is you talked about the shared responsibility or collective responsibility, irrespective of what role we are playing. Be it maybe we'll hear out views from Dipankar sir as well, be it from a government, regulatory, or the card industry, or if we are one of the fintech firms, or even as more important, I would say, as end citizens, as end users of these facilities, of these entire ecosystem. So, before we get into the questions, maybe I'll start with, you're on my left, Vishal. Happy to hear from you and then all our panelists. Just initial thoughts when we say, I know it's a very broad theme, securing financial transactions, but your views about how we are, what we are progressing in terms of when we talk about securing digital economy.
Sure, thanks Vidur. Lot of thoughts come to the mind, right? First of all, we are living in a world of real time, as cliched as it may sound, it's a double-edged sword. The downsides are obvious, right? So we can't really, once a fraud is triggered, there's limited things that you can do to intervene at that point. Our best resort is to prevent through education. Second, to look at strong SOPs. And it's not the SOPs for the big boys, right? The big banks would be typically up to speed. It's to get to the last bank on that street to be sure that the SOP is out there for everybody, but are they following it to the T? And then finally, some emphasis on detection, registering when a fraud has happened, and how do we action upon these, right? I think those become very critical. If you look at some of the initiatives that RBI has taken, right? If you Google Raju and 40 Thieves RBI document, it's one of the very interesting documents that I have come across, which in a very, very palatable, comic-like fashion outlines what are the kind of frauds that can happen to me as a citizen, right? So I forwarded it to my dad, my father-in-law, and suddenly it's very readable, right? They can relate to the document. It's fun to read. At least they'll progress a bit with that document. Second thing, if you look at RBI's annual report, right, some interesting and encouraging figures come out from that report when it comes to fraud-related numbers. Apparently, the overall value of fraud has actually gone down. So we should, as a country, keep doing what we are doing. But then there is a number behind that number, right? It's important to double-click on that number to understand what does that, decompose that number to see what are the elements within, which are the sector, which is the kind of audience which is more vulnerable, how to educate them specifically, what is the channel to educate them, do we need to pick a specific language in a particular state where there are more number of frauds, is there a certain type of fraud that's happening more, so rather than educating them about all the 40 kind of frauds that can happen to them, can I educate them about just 2 or 3 which they are more susceptible to? So that's on a more domestic front. And then, of course, there's some bit of action happening on the cross-border front also. There's more, so the entire payments language is going to change in the future with ISO 20022. There is a fair bit of emphasis that's being put on the framework for having controls around what each bank or financial institution does when it comes to these cross-border money transfers, right? What do they do to eliminate vulnerabilities in their own tech systems, right? So that keeps evolving.
Thanks, Vishal. Maybe request the Pankaj sir, just your initial thoughts about this
theme. I am not a security person, but I represent PFMS in Ministry of Finance. And many of you may not be aware of what PFMS is. It is basically Government of India's public financial management framework and platform where all treasury payments and benefits, direct benefits transfers happen. It is an IT system which runs, and the number of transactions that PFMS does, in the last financial year, PFMS did a total of around 200 crore in number of financial transactions, totaling around 29 lakh crore Indian rupees. So that is the volume that we deal with. And when we are dealing with such a huge volume, the probability of fraud slipping through is quite large. To detect fraud on a proactive basis is what is required. And that forms the very essence of our drive towards ensuring that the payment is made to the intended beneficiary. So one of the major concerns that we have in PFMS is, identity management. And the second is verifying the beneficiary so that the money that is intended for the person reaches to that particular account. So these are two challenges that we have. We manage Government of India's entire treasury operations, and also make payments for all social sector schemes, whether it is for the state governments or whether it is for the central government. The state government implements a lot of schemes where the center is one of the key stakeholders, and these are called centrally sponsored schemes. Like all of you might have heard about Sarva Shiksha Abhiyan, or the National Rural Employment Guarantee Act, or the National Old Age Pension, the PM Kisan, which is the benefit of 2,000 rupees, which is given to over 12 crore farmers. So all these payments are made through PFMS. And so the biggest challenge in PFMS is, to identifying the right beneficiary and making the payment to the person who it is intended for. The second part of the problem is whoever is making the payment. In PFMS, we have around 35 lakh implementing agencies who make the payments. Now, to ensure that the right person who is authorized to make the payment is making the payment is also another challenge that we face and we have to overcome. So these are two very large challenges that we have to deal with in our operations. Thank you.
Thank you, sir. So, Vikas, we did hear your initial view, so maybe I'll spare you and I'll definitely move when I ask you questions. Happy to hear, Vipin, your thoughts.
Thanks, Vidur, and welcome to all of you. The last physical event I attended was an SOCM event 2 years ago, and I can't believe all of us are back together. So thanks to all of you who, during a very difficult phase, did the great job of taking care of yourself, your families, and all your customers. And when I look at the walls on the left and the right-hand side, I see that most of the names are not the names which were there when I was growing up in the last century. So kudos to the fintech community for taking up the job of solving for unique problems that are there in the country. Hats off to you guys. Listening to what my fellow participants and panelists said, I echo with most of what they say. Just adding a few bits on how the COVID situation has helped at least the digital industry grow. So contactless emerged just today as a major form factor which we use for payments. The payment industry today needs to solve for Luddites like me who grew up in the previous century and the digital natives. And now we are talking about Generation Alpha who are 12 years and below, who will grow up seeing things only on the mobile. So as an industry, we need to take care of a varied set of people. One of the challenges Vidur called out, cybersecurity, has emerged as a big challenge. I'll add two more to it, operational resilience. And since all of us are holders of mobile devices, we are the risk managers for the bank. So our mobile devices are bank. So what we do on our mobile device defines our security, how the fraud and security ecosystem plays out. Couple of ways to solve it. The big piece is data. So three key components of data, and that ties back to Visa's foundational 4 pillars of security. We can solve it by devaluing data, which is making it junk. Technologies like tokenization do that. By harnessing data, and Sir spoke about it, how PFMS is creating different tools and making sure that slippages don't happen, frauds don't happen. The third one is protection, and the industry knows about using tools like PKI, encrypting data, etc. And last but not least is empowering everybody. And empowerment, devaluing data, protecting data, and harnessing data is going to be the key on how we solve and how we expect the unexpected, because fraudsters are also going to evolve.
Thanks, Vipin. And last but not the least, Joy, happy to hear your thoughts.
Thank you, and a very good afternoon, everyone. It's an honor to be here amongst distinguished industry leaders and my co-panelists. And as Vipin said, it's an event that's happening after 2 years. So really excited, to be here amongst all of you. And I have the privilege to also say that most of the aspects on cybersecurity have already been discussed. But what I would say is that, India, as we all know, that, we are moving towards digital India. and digital payments were always increasing pre-pandemic. But post-pandemic, it has exponentially increased 5x, as we must have heard earlier today from all of the speakers. And just to give you some numbers, India has emerged one of the strongest connected nations across the globe. We have around 80 crore internet users today. This number is expected to grow to 120 crores. 2 out of every 3 transactions are expected to be using one of the digital form factors going ahead. And the value of the digital transactions will be around $10 trillion by 2026, which is presently at $3 trillion. Now, having this growth story on one side, the other aspect is there have been first-time digital users in the industry and in India. The MSME sector has adopted digital space for the first time and has come to the cyberspace for the first time. Now, with these challenges, it has created new threat vectors in India in the form of phishing, ransomware, and other attacks that we all spoke about earlier today, and my panelists also spoke about. As they say, that security is as strong as the weakest link, and I feel that the need of the hour is to have a strong and safe cybersecurity environment. And this will all happen with the strong collaboration from networks, from banks, from fintechs, policymakers, and regulators across as we speak. And I look forward to today's discussion here on this great topic, and would love to share this challenge, because at the end of the day, we are all here to solve together for this challenge that the industry is facing on cybersecurity. And thank you.
Thanks, Joy. So maybe let me, on behalf of audience, I've thought of a few questions which, pick up brains of the panelists. Maybe I'll start with Dipankar sir, with you first. I know you talked about the challenges on the identity and other elements, because with the huge mass adoption of direct benefit transfer, but also on the second front, there has been a huge thrust on data localization, and with the entire fintech and application ecosystem being built locally. What are the mechanisms that government is monitoring? How is the compliance to data localization, or sort of driving these industry partners or ecosystem partners towards that they ensure that compliance also happens?
First of all, I spoke about identity management and beneficiary verification. So these are our primary areas. Data localization, as far as Government of India transactions are, we don't need to worry, because all our transactions happens within the geographical boundaries of India. We deal with only Indian banks. So as such, we do not have a problem with data localization but in general, data localization is taken care of by Reserve Bank of India, and Reserve Bank of India has already, since 2018, asked all financial institutions, including banks, payment gateways, service provider, third-party holders, to comply with regulations that their data do not travel outside the geographical limits of India. So that audit is has to be carried out by all these service providers using certain empaneled security auditors, and they have to give an undertaking every 6 months that they have complied with the SAR. So these audit happens every 6 months by all the financial institutions and are complied with the Reserve Bank of India. Coming back to my earlier statement regarding how do we manage the authentication or the certainty that that particular user is making the payment, who is the authorized signatory to carry out that payment. So identity management. And I'll talk to you about that first, how we do that. So in PFMS, we are dealing with that strata of society where we have the majority of our financial spenders in the heartland. So we have close to around 35 lakh, as I said, agencies who are disbursing funds to beneficiaries from Government of India schemes. And how do we ensure that the right person has logged in to the system and whoever is authorized is making the payment, we follow a three-pronged approach. One is, of course, the authentication that is needed to go into the system. The second is that we rely heavily on digital signatures. We ask the signatory to first of all enroll the digital signature, which passes through a workflow, and then we have an integration with almost 600 banks in PFMS. We share the digital signature with the debiting bank, and that forms a part of the KYC of that particular account holder with the bank. So whenever that particular agency is making the payment, the authorized signatory digitally signs the payment message, which goes to the bank. The bank then verifies the digital signature and then only forwards the payment through either NSCH or through Aadhaar payment bridge. These are the two modes that are used for effecting most of the direct benefit transfer payments. So that is one thing. Recently, we have also introduced a second factor biometric authentication using FIDO2. Those who have not heard about FIDO2, it is Fast Identity Online, a new technology which is formed by a consortium of industry partners and which is GDPR compliant also, and allows you to authenticate biometric either fingerprint or other biometric information before allowing you access into the system. So this is what we do for identity management. For beneficiary management, which is a much bigger slice of the cake, we have DBT beneficiaries of around 83 crores, which is almost the total adult population of this country. So all 83 crore beneficiaries are registered into our system, and there are two ways of registering them into the system. One is through their IFSC code and the bank account number in which they have the account, and the other is using Aadhaar as a payment instrument. So for those who do not want to use their Aadhaar, they register using the bank account and the IFSC code. And using our bank integration, we fetch the KYC information from the bank. So this KYC information is then shared to the stakeholder, and then the stakeholder either whitelists or blacklists the beneficiary if there is a mismatch in the KYC details that has come from the bank and the applicant's details. For example, if a student is applying for a scholarship, the name of the student as per the application has to match with the KYC details that is returned from the bank. So that way, PFMS provides a unique payee ID in the system, and anytime any payment is to be made to that beneficiary, that payee ID is invoked and the payment is made. For those who want the payment to be made using the Aadhaar payment bridge, they provide us the Aadhaar. So that Aadhaar number, we send it to NPCI, and NPCI we validate whether that particular Aadhaar is seeded with any bank. NPCI through its API returns the IAN number, which is the financial institution code, and based on that we then provide that information to the stakeholder to make the payment. So these are ways and means that we use in our system to ensure that the right person for whom it is intended receives the benefit. DBT payments have been going on since 1st April 2015, and since 1st April 2015 we have made a huge number of DBT payments totaling around 11 lakh crores of Indian rupees. Last year only we did a total of transaction of around 2.5 lakh crores for around 1200 DBT schemes all over the country. So, so far the process has worked, and we have instances of fraud happening despite all that, and most of the fraud which has come to our notice are because of identity frauds which has happened. So from this year also we have also introduced behavioral biometrics also to add another layer of security in identity management.